Always appreciate getting your thoughts there. Jody Lurie, she's a credit analyst at Bloomberg Intelligence covering the lodging space, amongst others. Talking about a deal that's out there. Choice Hotels launches hostile bid for Wyndham, reported by the Wall Street Journal. Wyndham had been rebuffing Choice for months here, and looks like Choice is taking this thing public, taking a little bit over the top here, going a little bit hostile here. So they're having an exchange offer beginning today, and we'll see how that works out. But again, people are traveling. That is for sure. S&P 500 absolutely unched on the day. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Amy Mars.
All right, thank you, Paul. Ukrainian President Zelensky also traveling, heading to the White House today. President Biden invited Zelensky for a meeting to underscore the U.S. commitment to supporting Ukraine. An aid package for the country remains stalled in Congress. The visit coming less than a week after Senate Republicans blocked a bill to give aid to Ukraine and Israel in their respective fights against Russia and Hamas. As Israel's war with Hamas rages on in Gaza, signs of discontent against the territory's militant rulers are starting to show up. Israel's Shin Bet security agency released a propaganda video of a former Hamas official denouncing the group's leaders. Other Palestinians are leaving critical posts against Hamas on social media. Bloomberg's Ethan Bronner has more on this from Tel Aviv.
While Hamas was, in fact, elected in 2006, that is, it did win parliamentary elections 16, 18 years ago, it is not widely adored by everybody in Gaza. There's been plenty of discontent in recent weeks and months in advance of this war. So, you know, some of that people were been more afraid to talk aloud. Since the war, the sense of desperation, they have been more open in their discontent.
Bloomberg's Ethan Bronner says it could signal a willingness among Gazans to rise up against Hamas if victory in the war isn't clear-cut. The special counsel prosecuting former President Trump in the 2020 election case is taking Trump's claims of presidential immunity straight to the Supreme Court. We get more on that with Bloomberg's Jody Schneider in Washington.
There was a filing Monday in which Jack Smith urged the justices to directly review a federal trial judge's refusal to toss out the indictment, telling them that it is of imperative public importance they resolve this issue quickly. This is an extraordinary case, Jack Smith wrote.
Bloomberg's Jody Schneider in the nation's capital. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This morning's inflation report largely in line with forecasts, we could say. Traders now see about 108 basis points of Fed rate cuts next year. That's down slightly from before the data was reported this morning. Reaction in stocks, major stock averages, little change right now. The S&P 500, 3 points higher. That's at 46.25 on the index. The Dow's up 90 points. The NASDAQ 100, 40 points higher. That is up about 0.25%. Meantime, Cameron Dawson at New Edge Wealth says the stock rally may have legs.
I think in the very short term, it can continue. The thing that we're watching the most closely is earnings estimates. If you continuously see earnings estimates remain resilient and you have this hope that the Fed can become more supportive, that allows markets to drift and melt higher.
And shares of Oracle right now, 11, close to 12% lower. They said cloud sales growth has slowed for a second straight quarter, and so this raised investor concerns about the software maker's expansion into competitive markets isn't panning out quite as expected. David Lee of Bloomberg Opinion, you got to read this piece, very interesting this morning. He writes, precedent suggests X is teetering on the brink of a ban for violating Apple's App Store rules, and that will be the final nail in the coffin for the platform that we formerly knew as X. This is over the restatement of Alex Jones on X this week. And Elon Musk, he argues, is playing with fire once again.
I don't think he cares.
Yeah, there is that.
I mean, he's already burnt through most of the value he paid for Twitter. It's gone. And to him, does it matter?
I don't know.
I guess to his, I don't know, to his
probably not.
I don't know.
Anyway, that's your Bloomberg business. Just thought I'd bring that up because it was so interesting, Jess.
Love you, JT.
She's looking
Always
at me
a
like,
pleasure.
what are you talking about?
No. You always have the best intros here. But, Paul, we're going to switch things up, talking about ETFs now. So we have Sean O'Hara, president at Pacer ETFs, joining us on Zoom to discuss ETF flows and his outlook heading into 2024. Now, Sean, there are 3 themes for next year you're looking at. What are they?
First, thanks for having me and happy holidays to everybody. Number one theme is that, this Magnificent Seven event that we had this year that has essentially driven all of the returns in the broad indexes. Those kinds of scenarios happen from time to time, but they never last. And so if they're not going to last, you have to think through what that looks like. And it either looks like one of 2 things to me. The big 7 sort of come back down to earth a little bit, or the rest of the market catches up. If the big 7 come back down to earth and you're cap weighted, you're going to get hurt disproportionately because there's so much weight of the overall indexes in those names. And if the rest of the market catches up, there's very little impact there because the bottom 50% of the names in the S&P 500 are only 14% of the weight of that portfolio. So I think one of the big themes next year will be to try to find different ways to weight portfolios that are not market cap weighted, equal weight, or using some kind of a fundamental weight, where you'll get benefit from this transition away from these 7 stocks dominating everything. My second big theme is that, AI is sort of here to stay. I'm not sure that companies have completely figured out how they're going to monetize it in terms of their business plans, but those people that are supporting AI, and that would be the software, hardware, chip makers, are going to continue to do well. And so owning those types of names, either directly in the form of individual stocks, we've got an ETF, TRFK, for example, it's up 50% this year or more, or owning the data centers is a way to potentially play that. And then my third theme is that, and it's kind of, ironic because of the inflation news this morning and how the potential for future rate decreases is sort of coming back a little bit from what everybody had expected, is that interest rates are going to have an impact on stocks. And so you need to be very careful about the kind of stocks you own. In particular, what we're seeing is in small caps. There are lots of folks talking about moving towards small caps because they've underperformed. But in the broad indexes, small caps, somewhere around 30% of all those names don't make any money. And they've been hit hard by the Fed rate increase cycle. So now about 30% of their EBITDA is being used for debt service. as a broad index. So finding in, for example, high quality small caps with lots of free cash flow is one way to sort of buffer that potential risk.
Hey, Sean, when I was first pitched ETFs years ago, the one thing that resonated with me, which I think is probably true for a lot of people, is the lower cost, the advantage of cost relative to mutual funds. And I understood that to be primarily or due in large part because they were passive managed. They were not active. And then you guys come out with this thing called active ETFs. I have no idea what that is. Are active ETFs, are they still cost competitive vis-a-vis mutual fund or other options?
Well, so let's make a distinction between, what people would think of as passive, something that would track the S&P 500 or the NASDAQ 100. That's sort of truly passive. Then you have a whole series of ETFs like the things that we do at Pacer that are passive, but they simply deconstruct those broad indexes and put them back together following a different set of rules. Like, for example, we use free cash flow and free cash flow yield on a big suite of our ETFs, which has been a big success for us. When you get to the active side, I think, there's a couple of things going on. I don't think there's going to be a major cost savings. There'll be a little bit of cost savings because you'll lose some of the additional fees that potentially would go along with mutual funds, 12b1s and transfer agency fees and things of that nature. But the big advantage to ETFs, whether it's passive or stuff like what we do or active, is the cost savings that the end investor will make over time by not having those capital gains distributions at the end of the year. And so this is going to be an interesting year for some strategies like dividend strategies, for example, where you've had almost no return and in some cases losses for the year, but they're going to still distribute capital gains. And so if you can save the money on the capital gains distribution, that impact over time will make the difference between, say, a 20 basis points or a 30 basis points or a 40 basis points or a 50 basis point fee pale in comparison.
Whenever you're
and one more point on that,
yeah.
active ETFs are nothing more than the mutual fund industry reacting to the flows, right? So they've been in net outflows for a decade while ETFs have been in net inflows. So they're just simply giving into the wrapper. It seems that they finally have caught on to the fact that potentially that the ETF wrapper is a better wrapper than a traditional 40 Act fund was.
Whenever you're speaking with your clients, what do they want to buy? What do they want to sell as the Fed's getting closer to the end of its hiking cycle?
Well, we've seen like this rush from one side of the ship to the other all year, right? I mean, we've said, the Fed's going to cut, and then they didn't, and they continue to remain pretty, vigilant in their cause to fight inflation. So we've been back and forth and back and forth. We're seeing lots of flows, for example, into small cap, as I mentioned earlier. We've got a terrific fund there. We've seen flows into international and global. As people are starting to try to find cheaper options than the traditional broad-based U.S. equity markets. And we're seeing flows into, large cap value, for example, where you're paying a little bit lower multiple than the broad market, and you're getting a little slightly higher dividend. So it's been an interesting year. I don't think all of the professional, analysts got that piece of it wrong. Now we're starting to see year-end projections where everybody says the S&P 500 is going to come in at around 5,000 by the end of the year, which is not really a big gain. So I think investors have been somewhat confused. There's a little bit of FOMO going on. There's a little bit of profit taking going on. There's a little bit of repositioning of portfolios that are going on.
Sean, just about 30 seconds left. Thematic ETFs, how do you view that part of the market?
Well, we have a handful of thematic ETFs. We've got an online gambling product, for example. We've got one that owns, everything that powers AI, as I mentioned, TRFK. I think they're an interesting part of the market. They're not really core to us. We have them, but I don't think that they're, the thematic ETFs over time will be able to gather, 10, 15, $20 billion in assets under management. They might be good $400, $500, $600, $1 billion funds, but so I think you have to be sort of careful in terms of playing those names. You're starting to see a lot of ETF closures happen because somebody comes up with an idea on a thematic ETF, and then the assets don't flow there, and so ultimately it closes. So I just think you need to be careful and look at the issuer, make sure the issuer that you're dealing with regard to ETFs is committed to their business and committed to keeping funds open over time.
Sean, thanks so much for joining us. Always appreciate getting a few minutes of your time. Sean O'Hara, he is the president of Pacer ETFs, joining us from time to time to give us an update on where the money is flowing, and it's certainly been, boy, for the last 10 or 20 years, just seems like it's just a tremendous growth part of the market. We'll have more coming up. This is Bloomberg. at some company news right now with Lisa Mateo.
Good morning, Pars. Shares of Oracle, they are lower, and this is after the software maker reported slowing quarterly sales growth in its cloud computing business. Bloomberg's Alex Semenova has more.
Cloud revenue rose 25% to $4.8 billion in the period ended November 30th. That's slower than the 30% gain in the prior quarter. Now, Oracle had been focused on broadening its cloud infrastructure business to compete with the likes of Alphabet, Microsoft, and Amazon, but that initiative hit a bit of a speed bump back in September after a year of accelerating growth.
Oracle right now is down about 11%. Slumping holiday sales pushing Hasbro to let go of about 1,100 workers, or close to 20% of its workforce. That's taking place over the next 18 to 24 months. Bloomberg's Abigail Doolittle says it's not a surprise.
In the last quarter that they reported, they highlighted the weakness and the sluggishness. They reduced their gross margin guidance for the year to 13 to 13.5% from 16 to 20%. But it wasn't just a matter of profitability. Revenues also came in. They were down 10% year over year for the guidance. They brought that in relative to the year as well, saying that sales would drop about 15%.
Hasbro down about 1.5%. One of Goldman Sachs' highest paid executives is stepping down. Sources tell Bloomberg Ed Emerson, who leads a commodities trading business, earned about $100 million over the past 3 years, more than what CEO David Salmon made during that same period. Emerson was also reportedly a critic of Salmon's leadership. Goldman right now is up a fraction. Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, a little bit of green on the screen here. S&P up just fractionally. The Dow up about 0.25%. NASDAQ up about 0.1%. Yields coming in slightly. We have the 10-year Treasury yielding 4.22%. WTI crude oil resumes its downward move, down about almost 3% today to $69 per barrel. Bitcoin finding a little bit of a bid out there, 41,300 on Bitcoin. Right now, let's head down to Washington, D.C. We'll get world and national news with.
All right, thank you, Paul. Ukrainian president wrapping up a two-day visit to Washington today with a meeting with congressional Republicans. Zelensky will make an urgent appeal for President Biden's $60 billion aid request for his country. Bloomberg's Jody Schneider reports he's going to face a tough audience.
Republicans want there to be some strings attached to any funding. They want to get these border changes. And so this $60 billion in aid that Ukraine, that the White House has been requesting for Ukraine is really tied up in all of that.
Bloomberg's Jody Schneider reports they're scheduled to hold a news conference at 4:15 this afternoon Wall Street time. You can listen for it on Bloomberg Radio and at Bloomberg.com. The House is also set to formalize the Biden impeachment inquiry tomorrow. House Speaker Mike Johnson wrote an op-ed in USA Today in which he said the House would go to court if necessary to enforce subpoenas. He says they're looking to see if President Biden traded official acts for foreign dollars and if he used his power to impede the investigation into his son, Hunter Biden. Biden denies any wrongdoing. Harvard President Claudine Gay will remain leader of the prestigious Ivy League school following her comments last week at a congressional hearing on anti-Semitism, which provoked a backlash from alumni and donors who say the university leaders are failing to stand up for Jewish students on their campuses. The Harvard Corporation, the university's highest governing body, released a statement saying it unanimously stands in support of her. Flu cases are surging, especially in the South. Experts say some of this is because of increasing vaccine hesitancy that erupted during COVID. Baylor infectious disease expert Dr. Peter Hotez warns against listening to anti-vaccine activists.
Yeah, we're seeing a big rise in vaccine refusal, and it's really unfortunate. It may be spilling over to flu vaccine.
Dr. Hotez encourages you to get a flu shot, and if you do get sick, take Tamiflu. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg, Paul.
Amy Morris, thank you so much. We appreciate that. Coming up in the next hour, we're going to check in with Gene Soroka. He's going to be in our studio here. He's the CEO of the Port of L.A. We've been talking to him ever since the beginning of the pandemic to get a real sense of how things are going at the ports when we had that real supply chain issue over the last several years. We're going to get the latest update on how things are at the West Coast's biggest port. Interesting story on the Bloomberg, just right up my alley at least.
It is.
Sherry Redstone is contemplating the sale of her interest in Paramount Global movie and TV empire, a deal that could lead to more than $13 billion in asset sales, including the CBS network. Redstone has held talks with Hollywood producer David Ellison, the son of billionaire Larry Ellison, and Redbird Capital Partners about an acquisition of her family's stake in the business, according to people familiar with the matter. And this is important because it really is in the hands of Redstone what happens to Paramount. Remember, Paramount was what the old Viacom and CBS. They kind of renamed it Paramount, which is the name of the studio. Because the Redstone family controls, and Sherry Redstone controls 77% of the voting stock. So if you want to do anything with Paramount, you got to get Sherry Redstone to kind of sign off on it.
And apparently these proceeds could help smaller production company reduce that debt. And so whether a sale actually occurs in the hands of Redstone, who, as you were talking about, controls about Paramount, 77% of that of the voting shares through a family holding company, National Amusements. But looking at what we were reporting here, the representatives of Redstone, Ellison, and Redbird all declined to comment at the website Deadline. And Puck reported that the talks were going on last week, Paul.
Yeah, looking at the stock here, we got a market cap here of about $10.4 billion. The stock is down about 7% year to date.
Down about 3.5% today.
Yep.
PARA is the ticker.
Yep. A buyer of Redstone's stake could generate $13.5 billion by selling Paramount's TV networks, including the CBS and Showtime. That's according to Wells Fargo analyst Steve Cahall, who's a good analyst, does a lot of work on this space. So kind of thinking about the future of this company, is it big enough to compete in the global streaming world? A lot of folks say probably not. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Joe Matthew. There's a lot going on in D.C., and Joe is our person in D.C. He's the host of Bloomberg Sound On and Balance of Power. President Zelensky from Ukraine, he's in D.C. There's also a formal impeachment inquiry into President Biden, so we're going to need to get the latest on all that. Then Gene Soroka, CEO of the Port of L.A., is going to join us to talk to us about the supply chain, shipping, all that kind of good stuff. Corey Sassauer.
Oh, it's going to be great.
Principal broker at Compass Real Estate joins to discuss the greater New York City real estate market and some of that pent-up demand out there. Nobody's selling their house.
Sounds familiar, though.
Yeah, we know that Sassauer name. Hopefully,
we're going to figure that out.
Relation, hopefully, but we'll have to see here. Let's kick things off with John Tucker and get a Bloomberg.
All right, let's start off with the bets. Traders slightly trimming their wages on rate cuts from the Federal Reserve for next year. This follows the inflation report we got this morning. CPI ticking up after being a little changed in October. And when you strip out food and energy, because somebody says they don't matter, the so-called core CPI accelerated on a monthly basis in the S&P 500 right now. 6 of the 11 major industry groups, they are higher. Financials in the lead. The biggest drag that's coming from energy as we see oil prices, they continue to fall. Which way for markets from here? We put that question to rest. Kostrich at BlackRock earlier today.
I don't think this is a bubble. I don't think we're seeing the irrational exuberance we all spoke about more than 25 years ago. But you do see a market that is now discounted a soft landing, which is very different than where we were back in March.
The S&P 500 right now 6 points higher. That's up about 0.1%. 46.28 on the index. The Dow Jones Industrial Average up 110 points. That's a rise of 0.3%. The Nasdaq 100 is up 55 points. That's a rise of 0.3%. 2-year yield only a basis point higher. 471 right now. And Oracle down over 11%, worst performing stock in the S&P 500 after the earnings that we got after the close of regular trading yesterday. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Paul.
John Tucker, thank you so much. We appreciate that as always. Jess Met and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com and check us out there. As John was reporting, a little bit of lift in this market today. Let's check in with Abigail Doolittle. She is the boss of these markets for us. She joins us yet again in the Bloomberg Interactive Broker Studio. Abigail, what are you looking at today?
Well, we are treading water, as we talked about the last hour. I think that the CPI report being right in line is not enough for investors to make a decisive directional move today ahead of the Federal Reserve tomorrow. Now, that said, though, the NASDAQ is starting to gain a little bit of steam here. We have the NASDAQ 100 up about 0.4%. Yesterday, we had a lot of those big tech names falling. Today, we still have at least one of them falling. Alphabet, this, of course, after they were defeated in court against Epic, citing that they had a monopolistic practice with their app store. That stock down about 0.7% after being down 0.1%. We also have Tesla lower, down 1.9%. But yesterday, we had all of the big tech stocks lower, I think ahead of the CPI print, just in case it came in hotter than expected and that yield would surge. To John's point, we only have that 2-year yield up at this point, up not even at this point 1 basis point.
We were picking your brain last hour about the VIX. If you look at it right now, around 12. I was talking to Mark Newton, who I know you speak with often, who heads technicals over at Fundstrat, and usually he talks about whenever you see broader markets sort of grinding sideways or moving higher, it would make sense to him to see the VIX where it is trading more complacent. I know you've spoke to him recently too. How do you view kind of the dynamic with the VIX in the broader markets?
I think that it does signal complacency, as it would have been before if there was that, there is that 12 handle. From a technical standpoint, it's funny because Mark and I were talking about this. I'm one of the only people who likes to chart the VIX, and it was actually one of my VIX calls was ahead of that massive spike in August of 2015, Black Monday.
Right,
So
with the PMI data in China. Right.
And
that was a wild summer.
That was a wild summer.
It was also when Greece's debt crisis was going on.
I think it charts extremely well. At this point, taking a look at it right now, it's in a similar pattern to what had propelled it higher at that point too. That said, it's seeking, or it is at a low, a 12-month low. It's basically at its lowest since 2020, ahead of the pandemic. So that is saying something. Now, when markets get too complacent, that of course sets the stage for a quick move in the other direction. The question here is, what could potentially cause that to happen? And on the other hand, I can remember a few years ago where we had the VIX in complacent level for a long time. As we were talking about the last hour, some of this reflects those zero-to-date options where people are hedging using options in that way. They're also using bonds where they're getting that yield. So I think the number one thing I would make of a VIX at a 12 handle is to say that the obvious, which at some point, the timing though is the tough piece, we're going to see a massive spike out of that complacency where people get a little bit nervous. Another point I would make about the VIX curve is very steep. If you go into next year, it's calling for, the last time I looked, an 18 or 19 handle. So that's in like 3 months. So the idea that traders right there are thinking that the VIX is going to go from 12, possibly close to a historic sort of norm level of 20, not quite there, but close to there, suggests that it's healthy that you have it moving in that direction. But on the other hand, it suggests that maybe some investors, traders, think that volatility could spike going into next year.
Just looking at the shares of Hewlett-Packard, HP Inc., billionaire investor Warren Buffett's firm, Berkshire Hathaway, has cut its holding in personal computer maker HP by almost half. That's not a vote of confidence.
Yeah, it's not. It's interesting. It's interesting that the stock is down only 0.1% on that. You know, one stock that's really catching my eye, and I think that it's so interesting ahead of Christmas, of course, is Hasbro, not down all that much, down 1.2%, but they've cut 20% of their workforce, 1,100 workers, 200 of those from a previous cut over the next 18 to 24 months. Now, they reported back in October. It was not a good report. They guided down on a number of levels. They're talking about declining sales. When a toy maker is cutting the workforce and delivering bad news right ahead of Christmas time, what does that mean? Is that poor demand on the part of consumers, or is that Hasbro specific? And I'm not a connoisseur of toys, but I would say, you know, just based on our articles, it's Transformers, Dungeons and Dragons, My Little Pony.
Yes.
It's hard to say, because then Amazon as a category, toys was very strong for them.
Right.
So maybe it's also some of the digital business. But I think that when you, and then the street is defending Hasbro, saying that this is like a positive.
Right. Morgan Stanley.
Yes, yes.
Is one of them, yeah.
Yes.
All right, very good. G.I. Joe, the Kung Fu Grip, you never know.
Wow, you know more about paw toys than me.
Exactly.
I didn't see those mentioned in the article.
Exactly. That's a reference from back in the day that John Tucker knows. But Abigail Doolittle, thank you so much.
Kung Fu Grip. Yeah. Paul and I used to play together.
That's perfect.
Wow, no, I'm really curious.
All right, John. Abigail Doolittle, thank you so much. We appreciate that. Good stuff there on the markets. Again, the S&P just up fractionally here. Let's get the latest on D.C., because there is a lot going on down in D.C. President Zelensky from Ukraine, he's making the rounds to Congress. We figure out what's going on there. We welcome Joe Matthew. He's a host of Bloomberg Sound On and Balance of Power. So let's start there, Joe. Start with, just help us understand, do we typically tie foreign aid to domestic politics?
No, which is why this has been a strange moment for some lawmakers who saw an emergency funding request arrive. And it still hasn't gone out the door because it's been bogged down in this debate over the border. But I'll also remind everybody that it's the White House that started this whole idea with the border. If you look at that request, it's more than $100 billion for Ukraine, for Israel, Taiwan, and then the border. That's really why we started talking about it. That was supposed to be a sweetener for Republicans who were wary of funding Ukraine. Now it's kind of devolved into this generational debate once again over border security, and it's slowing things down.
And we have Ukrainian President Vladimir Zelensky in Washington. Walk us through how big of a week this is when it comes to how it's a key week for the alliance.
Well, it's a key week for Congress because everybody's about to go home. Yeah. Unless they tell lawmakers to stay into the weekend, this is it. Thursday, Friday, they're going to be flying out of National Airport here in Washington to fan out across the country for the holidays. And if that's the case, they will have gotten nothing done. We're staring down the barrel of another government shutdown in January. We haven't figured out how to fund the government. We haven't figured out how to fund our allies in hot wars, and we haven't figured out how to deal with this matter around the border. Oh, and by the way, it looks like tomorrow the House may well vote to formalize an impeachment inquiry against Joe Biden, and that's not going to grease the skids for a deal.
All right, we'll get to that in a moment. Do we know the substance of President Zelensky's pitch this time around? Is he asking to, hey, decouple this from your border wall thing? Or is he not getting into the U.S. politics of it?
You know, from everything that we're hearing, he's not going there. I think he understands the politics at hand. He's very familiar with the people he's dealing with now. He was invited here by the White House as well as the leadership in the Senate, Chuck Schumer and Mitch McConnell. And I don't think he's going there to lecture anybody on the border, but it's more to say we are the last thing standing between NATO and Vladimir Putin.
Yep.
If we lose, if you let us run out of money this winter, now it's going to be on you. It's going to be on places like Poland that share that border and have a lot to worry about. Whether that helps to unlock money has yet to be seen. He will hold a news conference, by the way, from the White House with Joe Biden this afternoon. It's scheduled for the 4 o'clock hour Washington time. It'll be curious to hear him answer questions and not speak off a script.
Talk to us about the funding challenges that Ukraine also faces in Europe.
Well, sure. Look, this is, to your point, this is an alliance that it's dealing with, and there are a lot of Republican lawmakers who would tell you that our European allies are not doing enough to deal with something that's actually in their backyard. But when you hear Democrats, and specifically the White House, talk about this, and some Republicans like Mitch McConnell who support funding Ukraine, they point to that $60 billion. That's the ask. And the fact that it's not all going to Ukraine. In fact, most of it will stay here in the U.S. if this is passed, and will go to American defense contractors, not only to make missiles and shells for Ukraine, but to replenish our stocks here that have been drawn down to the point of needing to make more. They thought that argument would land well with lawmakers from Alabama and Georgia and Texas, where these defense contractors would be at work, but it hasn't moved the needle yet.
All right, Joe, let's go to the other topic du jour down in Washington. The Rules Committee set to vote on President Biden's impeachment inquiry. Can you just tell us what that means?
It's going to basically, it's a procedural vote that will allow them to have a real vote on the floor. Once they make a rule for that legislation, essentially, it will go to the floor and everybody weighs in. And it looks like this actually will happen with the majority of Republicans, if not all of them, on board here. It's obviously a pretty thin majority for Republicans, but it looks like Mike Johnson has the votes to do it. He wrote an op-ed in USA Today making it clear that the inquiry is necessary to figure out if this should go to trial. If it does go that far, though, it's not likely this is going to ever turn around. They're going to probably have to bring it to a floor vote. That's what history tells us. And that would happen right in the middle of an impeachment trial, in the middle of a re-election campaign for Joe Biden. So it's pretty remarkable. The fact is, though, we still have not seen convincing evidence that puts Joe Biden in trouble here. And that's the argument for the inquiry, that they would actually lay the groundwork for a trial. So tomorrow could be the day when that happens.
Walk us through how we got to this point with the inquiry.
Well, gosh, that's a little bit difficult for me to do because it's kind of hard to connect the dots on all of this. The fact of the matter is, when Republicans took the majority in the House, folks like Jim Comer, who is in charge of the Oversight Committee, Jim Jordan, who's in charge of the Judiciary, began immediate investigations into Hunter Biden, his son, and have painted a picture of what they call the Biden crime family without an actual smoking gun. So it's difficult to tell what the case is that they're going to make here. A lot of folks think this is politically motivated, and that wouldn't be anything new here in Washington. Sort of a retribution for the two impeachments that Democrats brought against Donald Trump. A little bit of a double standard here, though. Kevin McCarthy, of course, back when he was Speaker and before that in the minority, lambasted Nancy Pelosi for doing exactly what's been done here, starting an inquiry without a vote. This would put an actual formal vote on the inquiry to make the process formal and official, and then it would potentially lead to an actual impeachment trial, but that's a long way off.
And what is the response from the Biden administration or the Biden campaign or just the Biden camp here as it relates to President Biden?
The response from the White House, you're not going to hear a lot from the press secretary at the podium, but the response generally from Democrats, including people inside the White House, is go ahead, make my day. When you hear John Fetterman asked about this, he's the senator from Pennsylvania, Democrat, he likes to say to reporters, oh no, what are we going to do? Yeah, and he says, bring it, please, do that impeachment, because that will blow back so hard on Republicans, they'll lose their majority in the House.
How likely is something like this to really move forward when you were talking about how it's hard to pinpoint something that would actually be the catalyst to do this to Biden?
In terms of what would lead to a trial, it's really difficult to tell. I mean, if the majority is determined to do that, then they'll have the votes to do it. Every Democrat will likely vote against that. And at the moment, it looks like only one Republican is prepared to vote against an inquiry. So we'll see what the politics bring here. This is an election year. We're about to get into silly season, so I'd say anything's possible.
And Joe, just before we let you go, again, we've only got a couple of days for our esteemed Congress to get something done.
Yeah.
Just in general, what's kind of the to-do list here? I guess when they get back or before they leave?
Well, I ran down a couple of them. We've talked about Ukraine and Israel funding. Those are big. Border security, a big one. Funding the government beyond the beginning of February is going to be huge. And there are a lot of people predicting a shutdown around here in the new year. They just kicked it past the holidays. We also have to extend FAA authorization. FISA, the 702 warrantless spying program, is up for renewal. Both of those are being kicked into the new year. So basically, lawmakers have bought themselves time, but will likely crash into a wall on all of this stuff when they come back in January.
Wow. All right, Joe. Thank you very much for joining us. Joe Matthew from Washington, D.C. He is a host of Bloomberg Sound On Bloomberg Radio and Bloomberg's Balance of Power on television. He is our go-to voice down in Washington. There's a lot of balls in the air, as there typically are.
It's a big week.
Yeah, it's a big week.
Not just a Fed meeting. There's other things going on.
Yeah, President Zelensky, making his case for more aid to Ukraine. President Biden and the House dealing with that issue with a pending impeachment. So, and then, as Joe mentions, folks get back from the holidays, and it's an election year. Boom.
Right.
Right in front of you.
There's a lot happening. And also coming up close to the 2-year anniversary of the war in Ukraine toward the end of February.
Wow,
you can believe it.
Yep. Okay. Yeah, it's just, just amazing what's happening over there. S&P 500 up 0.1%. The Dow up 0.25%. Same for the NASDAQ. The Russell 2000, we'll call that out. That's off 0.25%. It had been performing pretty well for the last several weeks as this rally continues into year end and broadens out a little bit. All right, we're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning, Paul. Shares of Alphabet, they are lower after a federal court jury in San Francisco ruled in favor of Epic Games, deciding that Google holds monopoly power through its app store. Now, experts say the ruling could upend the mobile app economy. Bloomberg's Ed Ludlow explains what's next.
The judge who presided over this case will have to decide whether or not to enforce a change of policy for Google to allow app distribution outside of Google Play and another means of payment outside of Google Play. Our colleagues at Bloomberg Intelligence estimate that if that were to be the case, there would be a headwind to growth of 1 to 2 percentage points. Overall, the download or app market across Google and Apple is $200 billion a year.
Alphabet is down about 0.7%. Sticking with tech, ARK's Cathie Wood has boosted her stake in Microsoft and Meta. Bloomberg's Katie Greifeld has the breakdown.
Let's start with Cathie Wood buying Microsoft and Meta in the ARK Next Generation ETF. We're talking about pretty small numbers in dollar amounts, just over $3 million a piece for those shares. But this was the first time that ARK has bought Microsoft in 9 months, the first time that ARK has bought Meta in 5 months. So clearly some demand returning there.
Now, Microsoft is up about 0.1%. Meta is up about more than 1%. And meanwhile, Warren Buffett's Berkshire Hathaway has cut its HP holdings by nearly 50%. And that's just over the past couple of months. Now, filing shows that Berkshire is on track to be a seller of HP for a second straight quarter. The PC industry has really been struggling to work its way back from a post-pandemic bust. HP is up about 0.5%. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Essentially, we're kind of in a holding pattern ahead of tomorrow's Fed announcement. Markets on a 6-week winning streak. S&P 500 sits at the best level since March of 2022. Right now, not a lot of movement. The S&P 500, 5 points higher, up 0.1%, 46.27 on the index. The Dow Jones Industrial Average up 100 points. That's a rise of 0.3%. NASDAQ 100, 61 points higher. That is up 0.4%. Let's get to the data this morning. Core consumer prices accelerating in November, rising 0.3%. Yet shelter and service costs offsetting a drop in gasoline prices. Now, the Fed funds future is now eyeing a rate cut in May. Remember, it was March. Also had the small business optimism index falling in November to the lowest since May. The outlook remains clouded amid the pessimism about sales as well as earnings. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jess and Paul.
John Tucker, thank you so much. We appreciate that. Jess Menton, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so check us out, youtube.com, search Bloomberg Radio. So, Jess, going all the way back to the pandemic, the global economy shuts down.
Supply chain.
And then the global economy opens up again. And you're right, we all learned a new term, which is supply chain, and how fragile the global supply chain is. And we had no idea what was going on. Thankfully, we started talking to somebody who really does, and he was very, very good to us during the whole pandemic, giving us kind of a real explanation of what's going on in the global supply chain. That person is Gene Soroka. He's the executive director of the Port of Los Angeles. He joins us live here in the Bloomberg Interactive Brokers studio. Port of Los Angeles, the busiest container port in North America. So absolutely right on the front lines. Gene, thanks so much for joining us here. It seems like, well, let me ask you, are we back to quote-unquote normal in terms of that global supply chain?
Yeah, happy holidays, Jess and Paul. Great to be back in New York. Generally speaking, yes. All the vital statistics in Los Angeles, just use that as a barometer of the nation's supply chain, look great. Cargo is flowing smoothly, and there is capacity available as the market picks up, which we project it will again in 2024. Overall, global trade is down about 5%. Here in the U.S., imports are down about 18%. So some of the entanglements we witnessed during the pandemic have been worked out. A lot of thought went into it, but also eased by that lower volume. Gives us a chance to kind of catch our breath and fix some of the things that needed work.
What does holiday shipping look like right now, and what does that tell us about the direction of the economy?
Yeah, compared to years past, Jess, even in recent memory, inventory levels across the nation look good. In-store fulfillment centers themselves also look good as far as getting the products that we want when we order them or go to the store. At the Port of Los Angeles, we've seen 4 consecutive months of year-on-year gains. Steady improvement, trying to fuel that U.S. economy. And what we hear from the retailers, we had a good Thanksgiving weekend from Black Friday through Cyber Monday, about an 8% uptick. And those experts are calling for about a 3 to 4% gain in overall holiday sales when everything is said and done.
So we here on Global Wall Street have been hearing about a recession for 18 months that hasn't really shown up. What do you see in your data? What do your customers tell you?
Well, we don't. And if you keep talking about it, you could probably talk yourself into it, as you both have seen for a long time. But by technical standards, and in the definition, we had a recession last year, Q1 and Q2, with GDP declines in that first and second quarter. Since then, the numbers are all over the board, unlike what we've witnessed in recent memory. But the jobs report, easing inflation. We think that interest rates have peaked now, and with 8.7 million jobs open around the country, although off their highs, still a lot for that U.S. economy to fuel in servicing those of us who are buying and going out for experiential plans with our family and friends.
What lingering issues still haven't been resolved yet from COVID when it does come to those supply chains?
The interconnectivity, the dependencies that we all have on each other. In our business, Jess, there are about 12 nodes in the supply chain that have an impact of what we do at the ports, yet we're so visible. So drawing people together for better collaboration, absolutely key. We cannot work in silos. Second, this information sharing concept that we pioneered almost a decade ago has to become mainstream. And if you're going to share information to make sure that those handoffs are succinct, you've got to protect that data through cybersecurity and resiliency.
All right, Map Go, which was just critical during the pandemic when we were talking about the supply chain. You can filter it to see the ships at port all around the world, including Los Angeles and Long Beach. You guys look pretty good there. I mean, it's a wholly different story than what it was, at the peak of the supply chain issue. Talk to us about when stuff gets into your port. I kind of forgot, you explained it to us before, it's got to get loaded, unloaded, put on a transport. How is that whole supply chain working? Getting stuff, once it's off one of those big ships, out to America?
Yeah, better, Paul, but still a lot of work to do. And if you've seen one port, you've seen one port. We're a gateway. We unload that entire vessel when it comes in, load it back up to head to Asia. Our productivity at 12,000 container units loaded on and off a vessel at Los Angeles is the best in the business today. But that cargo has to move off that terminal tarmac. And with the benefit of history, that's what slowed us down the most during COVID. Cargo was sitting at the port. Some used it as a warehouse because they were buying their goods just in case, not necessarily just in time. But all the vitals today look great. If we can get that cargo off the port property in 2 to 4 days by rail and truck, then you're really starting to see the capacity gains that we all look for.
When it comes to inflation, everyone talks about obviously goods versus services. Do you have a gauge whenever it comes to shipping to tell us what exactly that looks like when it comes to the difference between those two and how that obviously impacts inflation?
Yeah, big topic today, Jess, supply versus demand and capacity. Right now, we've got the liner shipping companies who are based in Asia and Europe bringing in new capacity, larger ships, more fuel efficient, more clean for the environment. And those purchases were made with a cycle time of about 3.5, 4 years. We're starting to see that tonnage come in as global trade has moderated and in some cases declined. So you've got excess capacity, lower demand. Prices are in the favor of the American importer and exporter this coming year.
So, Gene, you guys at your port have a great view on China. So much of that trade comes into your port from China. It's a direct route. What's your view of what are you seeing from China and the activity coming out of China in terms of trade?
Yeah, on the business side, many of the folks that we deal with are talking about a China plus one strategy, not putting all your eggs in one basket. The geopolitical issues scare a lot of people, make them nervous, but also just good business practice says, I got to be able to move my sourcing out a little bit. Similar to when I lived in China during SARS, 20 years ago, a lot of the same discussion. So we are seeing growth in Southeast and South Asia. The Port of Los Angeles, year-end 2022, about 57% of all of its cargo emanated from or was destined to China. We'll close this year at about 53% of our business with China. Okay. So it's moved down a little bit, but has not fallen off a cliff like some had imagined.
What about Europe?
Europe, very small percentage. Our theater is the Trans-Pacific. Second market is the west coast of South America with respect to perishable fruits and vegetables. That's really our strong point. About 3 to 4% of all the products that we move in and out emanate from Europe. More natural trade lane is across the Atlantic to the East Coast and Gulf Coast ports of the U.S.
So when the West Coast ports were having some challenges with productivity, I remember you coming in here and saying, some shippers were even going to take the extra cost and maybe go through the Panama Canal and go to the eastern ports like, Savannah or New York or whatever, New Orleans. Have you got that business back? Because we were just mentioning off air, I just saw a photo of a gazillion ships trying to get in and out of the Panama Canal because it's low water level. So that's not an option anymore, is it really?
No, issues are popping up left and right, and now we're just a little more attuned to them in the supply chain with so many eyes on the system. We completed a 13-month contract negotiation with our dock workers back in the summertime. Since that contract was ratified, we've seen about 4.5 to 5 points of market share come back to the west coast of the U.S. There is good evidence from importers that they're moving a little bit more cargo via the west coast because the transit uncertainty going through the canal with its low water levels right now is is a little bit too much of a risk. Even though you can buy yourself up in the queue a little bit, that doesn't apply to everybody going through there. And coming up, election year, a lot of folks will be looking at that policy and perspective. And the dock workers on the East and Gulf Coast will be negotiating their contract coming up this summertime. So a lot to keep in view.
Right, especially when it comes to those contract negotiations. Do you see any sort of sticking points that could cause any sort of concerns and potentially what that could affect when it comes to, obviously, the port and what that means for shipping?
Well, across America, we saw a summer of discontent, Jess, and a lot of final negotiations and contracting in the favor of labor and the employee. I don't see that any different on the East Coast. It's folks that work through the pandemic day and night, fearless of health and safety issues, trying to keep the American economy moving, and their payday is due.
Yep. 30 seconds. What brings you to New York other than New York?
A couple of industry events. Wanted to talk with you all and kind of give you a layout here of what we're looking like towards the end of the year, the holiday season. And I'm optimistic about 2024. We've got a relatively early Lunar New Year, February 10th, and I see the calendar of supply chain falling a little bit more normally next year with an uptick in cargo through the Port of LA.
Gene Soroka, thank you so much for joining us. We really appreciate you coming in today and during really the last several years when everybody was trying to get a handle on what the supply chain issues, what the issues were, and how they were going to play out. Gene Soroka, Executive Director, Port of Los Angeles, the busiest container port in North America. So how about that? And again, Map Go is a pretty cool function on the Bloomberg terminal. You can see where all the ships are all over the world and as they go into ports. And again, the Port of Los Angeles and Long Beach looks pretty solid right now. I don't see too many ships hanging out there like we did back in the day. All right, right now, let's head down to Washington, D.C. We will get world and national news with
Amy Morris.
All right, thank you, Paul and Jess. Republican senators emerged from a closed-door meeting with Ukrainian President Volodymyr Zelensky, steadfast in their demands that Democrats accept tougher border restrictions as the price for more aid to Ukraine. Senate Majority Leader Charles Schumer says the meeting was, quote, very powerful.
He made it clear, and we all made it clear, that if we lose, Putin wins. And this will be very, very dangerous for the United States. So we cannot let Putin influence through any surrogate what we need to do for Ukraine.
Democrats are resisting most of those Republican demands, leaving both sides locked in a standoff. As Israel's war with Hamas rages on in Gaza, signs of discontent against the territory's militant rulers starting to emerge. Israel's Shin Bet security agency released a propaganda video of a former Hamas official denouncing the group's leaders and other Palestinians leaving critical posts against Hamas on social media. Bloomberg's Ethan Bronner has more on this from Tel Aviv.
While Hamas was, in fact, elected in 2006, that is, it did win parliamentary elections 16, 18 years ago, it is not widely adored by everybody in Gaza. There's been plenty of discontent in recent weeks and months in advance of this war. So, you know, some of that people were been more afraid to talk aloud. Since the war, the sense of desperation, they have been more open in their discontent.
Bloomberg's Ethan Bronner says it could signal a willingness among Gazans to rise up against Hamas. New Hampshire Governor Chris Sununu is expected to endorse Nikki Haley for president. That endorsement, which is expected as soon as tonight, could give the former South Carolina governor a boost in her push to emerge as the leading Republican alternative to Donald Trump, currently the Republican frontrunner. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash as we look at the major stock averages inching higher ahead of tomorrow's Fed meeting. 6 of the 11 major groups in the S&P 500 in the green right now. Underwhelming inflation data only reinforcing speculation the Fed's going to keep rates elevated for a period of time before it considers easing policy. The Fed's job isn't done yet, according to economist Lindsay Paeza at Stifel Nicholas.
Clearly, they haven't done enough to see below-trend job growth, to see below-trend spending activity, and certainly not enough to get that prolonged period of below-trend top-line activity to ensure a return back to stable prices.
Right now, the S&P 500, 6 points higher, up about 0.1%, 46.28 on the index. The Dow Jones Industrial Average up 123 points. That's up 0.3%. The NASDAQ 100, 58 points higher. That is up 0.4%. Not a lot of movement in yields after the data this morning. 2-year right now, pretty much unchanged, 470. And Boeing delivering 45 of its 737 family jets in November, its largest such tally in 5 months. So that leaves the manufacturer about 24 aircraft short of its revised annual target. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jess and Paul.
John Tucker, thank you so much. We appreciate that. Jess met and Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Radio. So, Jess, when I bought the Jersey Shore compound earlier this year, my
mortgage rate
6%. I felt like a knucklehead. But now they got to over 8%.
It's looking a little pretty good now.
Yeah, I'm a real estate mogul. They're back down to 7.32%. That's the bankrate.com 30-year fix. So trending down a little bit better. But I don't know what's happening out there because nothing's moving out there because nobody's going to get out of their 3% mortgage and go take on a 7.3% mortgage. Let's talk to somebody who does this stuff for a living, a professional. Corey Sassauer, principal broker, Compass, joins us here in our Bloomberg Interactive Broker studio. Suspicious last name. I'm just going to assume there's no relation. Hope for the best.
No relation.
Hope for the best that she doesn't talk, emerging markets. Corey, so there's just nobody's selling their house. I mean, what do you say to somebody that you're trying to drum up some business here because they're sitting on a mortgage that's 3 or 4%, and if they go anywhere, they're going to have to pay so much more. How's that market playing out?
Absolutely. So a lot of those guys are going into rentals, and that's kind of what they're doing. There's a lot of rentals out there. The rental prices have definitely come down because more people are developing rentals. So what we're doing is we're going into listing presentations, and we're talking to them, and they're worried that their house is at its height right now, that the most money they're going to get is right now. They're afraid that it's going to get less.
Do you think that's a fair way to think about it?
I think in the next few years, I don't think right away. We are in a massive underbuilding situation. There's not enough homes for the people that need it. So I think it depends on your location. Real estate, if I've learned anything in my many years in it, is super hyper local. Yep. So every market is different. I'm really speaking more tri-state area. But we say, all right, they're ready to go. They can't do the stairs anymore, or they kind of want to get out. They want to make their money somewhere else. So we're putting them into rentals while they figure out what the right lifestyle is. Are they going to right size? Do they want a different house? Do they want to go near their kids? Do they want to go somewhere warmer? Do they want to go somewhere where the tax rates are more favorable? So they need to kind of figure out their life, and a rental is the best option for them to do that. And, they'll do 6-month rentals, a year rental, and they have a good idea after a year where they really want to go.
Talk to us more about the low inventory that you were alluding to, because that was an issue well before the pandemic, coming out of the great financial crisis, but obviously was exacerbated by the pandemic. What kind of regions have more issues when it comes to low inventory, or is it more broad-based around the country where it's a problem?
Yeah, so I don't think it's broad-based. I think there are some areas that inventory, I think in the tri-state area, our inventory is really, really tight. We sold 25% less as a county, and that's not because the demand was lower. Up in Westchester. And that's not because the demand was lower. It's really because there wasn't enough houses to go around. Yep. So there was bidding wars everywhere. The prices have definitely gone up, and they've maintained that. Prices that are homes that are priced right are going way above asking, hundreds of thousands over asking.
Still?
If they're overpriced, they're sitting. People do not overprice your house. Price it right, you will get a bidding war. It happens every time, but if it's overpriced, it sits. So it's still happening. Contingencies in our area are still being waived. People are very used to the no mortgage contingency anymore.
Really?
And appraisal contingencies are going away because now we have 2 years of strong data of home sales that are higher priced.
Yep.
In the beginning of the pandemic, it was harder. Homes weren't appraising because we didn't have any data. It was so much lower than it was 6 months ago. Now houses are really appraising, so people are willing to waive those contingencies. I'm telling my guys, get in now. When the rates start going down, there's going to be even more demand, and you can refinance as time goes on. A lot of the lenders are now offering one free refinance within the year that you lock into a rate. So if rates do go down a half a point, you can refinance without all the extra costs.
So is there a rate, I mean, when you sit around with your real estate buddies talking about the biz, is there a rate on the mortgage that you think will magically cause sellers to say, okay, now I'll put my house on the market if it's, I don't know if that rate, again, we're still north of 7% on the 30-year fix. Is that 6%? Is that 5%? Where
Right, like
there's
what's
some
the
clearing
catalyst?
rate. Yeah,
Right.
Absolutely. I think it's like 5.5.
Okay.
I think that's kind of the magic number. The 7-year ARMs are at 6% now, or even a little bit lower. You can get it if you can put money into a bank. They give you like a favorable discount. So there's a lot of lenders out there. There's a lot of people. It's a very competitive marketplace right now. You can definitely get a better rate than what you're hearing on like the national average, and it's very county based. So some counties have lower rates than others. But I think 5.5 is like the right number where you're going to see kind of the floodgates open up. But people still have to move. People are getting married. People's homes are, families are expanding. People have job changes. So there is still always going to be an influx and flow. But my advice would always be to get in before
Westchester
that.
County, it's such a great place to live. It always has been a great place to live in the metro New York area. Did you see a meaningful, during the pandemic, I'm just going down to Florida. I'm done. I'm done with Westchester. I'm done with Connecticut.
Yeah,
Did you see that?
absolutely. Anybody whose jobs who can take them where they didn't have to be in the office, or they had more flexibility. People were going for a better quality of life, warmer weather, lower, taxes.
Yep.
Yeah, a lot of people, everybody was going down to Florida. We've had a ton of people come back though. The real world has set in. New York is where it's at. Sorry.
That's what I was curious about. Is how have things shifted then from when
a lot of people
and a lot of peak of COVID to now?
Yeah, a lot of people have come back in our area, and a lot of people kind of made poor pandemic choices, and now they're kind of fixing that. So they're changing. They're not necessarily happy. They were going wherever they could get a house.
One thing I'm curious about, because Paul brings this up about in office, how much has that changed when people are coming back who may have left, who were called back to come in office?
It definitely changes a lot, and it changes how north people are willing to go. So, we had people that would be willing to commute an hour and 45 minutes. Now they want to go back to the towns that are maybe 30 minutes on the train. So I think there's actually, if I had a higher priced home in the more northern towns, I would be more concerned about my value than I would if I was in a more southern town, given the fact that most companies are making people come in 4 days a week.
That sounds like a more normalized metro New York kind of market.
It is, exactly.
All right, so, but again, you're up there in Westchester. It's always been in great demand here. If I put a house on the market reasonably priced, how fast will it sell, do you think?
Within a week.
Really?
Yeah.
Wow.
We'll put it on the market. We'll do a coming soon on a Monday. We'll make it live on Thursday. We just did this last week. We had 30 offers. It went 250 over ask, no contingencies, and it went to contract within 24 hours.
Who's buying
of
these
accepted
things?
offer. All it depends on the price point, right? So I think it's first-time home buyers. It's people trying to look to move up because they kind of grew out of their house, or they're maybe in an area that they, want to be in a different area, better commutable area. I think the first-time home buyers are the drivers of the buying market, and then the sellers are the downsizers, or we call them right-sizers. They're not necessarily downsizing their house. They're just going to a house that makes more sense for their current lifestyle.
So if you're a potential buyer, and we only have about 30 seconds left, what do you think are the top things they really need to be aware of right now?
They need to get a pre-approval. If they can get it underwritten, I think that would be amazing, so they know exactly how much they can spend, and they should go see every house that's out there, because they may not know what they like until they see enough things. They need to be ready to rock when it's time.
That sounds like a seasoned real estate
Right.
agent. I'm ready to go.
I think so.
Yeah, I sold my the Summit place right at the beginning of the pandemic, and the salesperson, the industry, didn't really have a firm grip on where the market was.
Right.
So I took their number, I put 20% on top of it, and I still got still came in over the top of that. It was crazy. Now I think there's a lot of comps and people have a better sense of what's going on. Corey Sassauer, principal broker, Compass, up there in Westchester, talking about a market. It's still very robust out there. And I can tell you, same thing in Jersey. So again, good time to sell. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it. Paramount's TV networks, including CBS and Showtime, could be sold in a breakup. Shari Redstone is considering the sale of her stake in the global movie and TV empire. Analysts say the legacy TV channels could fetch $13 billion. Now, Redstone has held talks with Hollywood producer David Ellison and Redbird Capital Partners. Paramount right now, they're down about 4.5% almost. And a banker-turned Danish brewing executive about to raise the price of beer. Bloomberg's Gina Cervetti has that story.
The new CEO of Carlsberg says he'll keep raising prices and spend more to drive growth in Asia as the Danish brewer looks to offset the loss of Russia operations seized by that country's government. Carlsberg also plans to add more low and no alcohol beers spread across its brands.
Carlsberg is down about more than 0.5%. And what goes better with a beer than a burger? And Wendy's, they want an AI chatbot to take your order. Now, more of its restaurants will be testing out the tech that's powered by Google Cloud's AI software. It's currently taking drive-through orders at 4 company-owned restaurants in Ohio. Wendy's says more locations will start using it soon, and franchisees, well, they're going to get a chance to test it out in 2024. Wendy's is down just a fraction. And what's a hot online website for shoppers? According to research, it's a Chinese-backed Temu app. Games and rewards, they're enticing shoppers to spend almost twice as long on the platform than they are on the apps of major rivals like Amazon. Now, Temu has seen tremendous growth in the U.S. with sales topping fast fashion retailer Shein. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, a little bit of a lift to the market out there. The S&P is up about 0.1%. The Dow's up about 0.4%, and Nasdaq's up about 0.2%. So a little bit of a lift out there. Yields pretty steady here. The 10-year Treasury in just about 1 basis point, 4.22% on your 10-year. The movement here is in the energy space. Once again, WTI crude oil off almost 4%. We're now under $69 per barrel, $68.50 per barrel. So big move down in oil. So that's always good news if you're pumping, putting gas into the car. Bitcoin, we'll call that out. It's up 0.25%, 41,300 on Bitcoin. Right now, let's head down to Washington, D.C. We'll get more of the national news with Amy Morris.
All right, thank you, Paul. Republican senators emerged from a closed-door meeting with Ukrainian President Volodymyr Zelensky, steadfast in their demands that Democrats will accept tougher border restrictions as the price for more U.S. aid to Ukraine. Congressman Chip Roy of Texas says he is not going to budge.
You have a fundamental duty to secure the border of the United States, first and foremost. Do it. This is non-negotiable. I don't know how clear I need to be about that.
And Senate Armed Services Ranking Member Roger Wicker, a Mississippi Republican, says congressional approval will likely slip to early January as the border talks continue. The House is set to formalize the Biden impeachment inquiry tomorrow. House Speaker Mike Johnson wrote an op-ed in USA Today in which he said the House would go to court if necessary to enforce its subpoenas. Johnson says they're looking to see if President Biden traded official acts for foreign dollars, if the president used his power to impede the investigation into his son Hunter Biden, and Biden himself denies any wrongdoing. Authorities have found a critical structural failure in one of the busiest bridges in Rhode Island. They've closed its westbound side to begin a repair job. The Washington Bridge serves as a key gateway to the state's largest city. The Rhode Island Department of Transportation says a critical failure of some original 1960s bridge components was located in the bridge, and the repair work could take 3 months, maybe more. Now, this is supposed to be the happiest time of the year, but for those who have lost a loved one, this could be a really sad time. Joe Perez is with the Baptist Health System in San Antonio, and he says it's okay to grieve during the holidays, and that pretending to be happy is just going to make it all worse.
It'll come out in some other health way, or it'll come out when they least expect it through anger.
And if you know someone who has lost a loved one, Perez encourages you to reach out this time of year because just talking about it helps. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jess.
All right, Amy Morris, thank you so much. We appreciate it. All right, big news in the business of sports. Shohei Ohtani.
This is a big deal.
Big deal. $700 million over 10 years. And there's a business angle, which Bloomberg found, of course.
Of course.
Baseball superstar Shohei Ohtani's record $700 million 10-year contract with the Los Angeles Dodgers could already be a boom for his corporate sponsors whose shares have largely underperformed this year. The contract is the biggest ever in the history of North American sports. That's according to MLB.com. It will put Ohtani even more in the spotlight, helping advertise the products and services of his corporate supporters, including Mitsubishi UFJ Financial Group, Japan Airlines, Coast Corporation, and Seiko Group. All those shares were moving higher.
Yeah, Japan sponsor shares outperformed the broader market in 2021. So most of those sponsor shares also gained yesterday. So seeing some moves there, but basically looking at how the news comes as the Japanese shares retreated from 3-decade highs that were reached earlier this year on signs the nation is escaping from deflation while companies focus more on increasing shareholder value, Paul.
Yep, so it's interesting. Ohtani, who's 29, who has been likened to the legendary Babe Ruth for his ability to hit home runs and pitch at elite levels, has also helped lift sponsor share prices in the past after he became the first player in nearly 100 years to start a game pitching while leading Major League Baseball in home runs in April of 2021. An equal-weighted basket of the 5 of his sponsors outperformed the Bloomberg World Apparel Index. Yes, we have one of those, and the Topics Index over the next few months here. So what's interesting, I think, from this contract, $700 million over 10 years. He's deferring $680 million of this. And I was reading from some other reporting that he doesn't really need the cash. He kind of makes maybe up to $40 million a year in sponsorships.
Deferrals to mitigate those competitive balance taxes.
Yep, very interesting. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to talk to John Author, senior editor with Bloomberg Opinion. He's going to discuss the markets, the Fed, as well as his opinion piece on the economics of Shohei Ohtani's record contract we were just talking about. So that should be interesting, coming from an Englishman. But he is a diehard Boston Red Sox fan.
He is.
So he'll have an opinion there, an informed opinion. All right, Brad Case, chief economist at Middleburg Communities, is also going to join us to discuss the FOMC meeting, CPI, and the impact of the Fed's rate hike cycle in the real estate space. And then David Katz, president and CIO of Matrix Asset Advisor, he's going to give us his market call, maybe get a couple stock picks out of him if we're lucky. Let's kick things off this hour. Charlie Pellet.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ all advancing ahead of Fed Wednesday. As CPI Tuesday, we have got the Dow, the S&P, NASDAQ all in the green right now. S&P up 4 points. That is a gain of just about 0.1%. Dow Jones Industrial Average up 137 now, higher by about 0.4%. The NASDAQ 100 Index up 38 points, up 0.2%. NASDAQ Composite Index up by 0.1%. 10-year yield 4.21% with a 2-year 4.70%. Spot gold down $1.10 the ounce right now to $19.80. That is a drop of just under 0.1%. And a retreat for crude with a 68 handle today, 68.51 on WTI. Lower now, West Texas Intermediate crude is trading down by just about 3.9%. While today's CPI report did not alter bets that the Fed will be on hold tomorrow, it does bring into question the market's aggressive pricing of a dovish pivot in 2024. Ira Jersey is chief U.S. interest rate strategist at Bloomberg Intelligence, and he was a guest this morning on Bloomberg Markets.
If the Fed came out and said, hey, we actually think we're going to cut 100 basis points next year, that would be a signal that, that would have to come in conjunction with the rest of the summary of economic projections saying that they were going to have much lower inflation and much slower growth and higher unemployment than what they said in September. And based on the preponderance of the data, I'm not sure that we'll get that.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. Choice Hotels is launching a hostile takeover offer for Wyndham Hotels and Resorts after repeated attempts to reach a deal with the rival hotel chain were rejected. Shares are both lower. Right now we have got Choice down by 2.1% and Wyndham shares, they are down by 0.4%. Oracle after earnings now plunging 11%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Bloomberg Markets is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Paul?
All right, Jessman, thank you so much. We appreciate that. A little bit of green on the screen. Let's check in with Bailey Lipschultz. He covers all the markets for Bloomberg News. He joins us here in our Bloomberg studio in New York City. Bailey, what are you looking at?
Yeah, guys, seeing green on the screen, but the laggards are what really stand out this morning. Looking at the biggest drags on the S&P 500, you've got Oracle, Tesla, and Google parent Alphabet. Two of those three have news, though. Oracle, as Charlie mentioned, down 11%. Underwhelming results, its biggest intraday decline since the last time it reported quarterly results. Ticker ORCL right now, again, down 11%. Biggest drop since mid-September. This coming after revenue was weaker than expected. Analyst commentary standing out from Bloomberg Intelligence, Anurag Rana, saying that the cloud infrastructure growth was below expectations and likely driven by a shortage in the availability of AI chips, which he doesn't see reversing course in the near term. So another skittish development for Oracle. And Google down 0.8%, ticker GOOG or GOOGL. This coming after the company lost an antitrust court fight to Fortnite maker Epic Games, ruling, according to Bloomberg, threatens to upend the mobile app economy and could cost the technology giant billions of dollars in revenue. So we do have green markets after that economic data, but 2 of the 3 stocks standing out to the downside.
Well, also Hasbro, we were talking about that earlier today. If you look at that ticker symbol, HAS, down about 3% on pace for its worst day since November 16th. What are we seeing there?
Yeah, this coming after the company laying out plans, Jess, to cut close to 20% of its staff, that coming amid a slump in sales of toys and games during the holiday season. Morgan Stanley said the headcount reduction is proactive in nature, but this is a company that makes toys and things related to Dungeons and Dragons, Transformers. I know Matt Miller, I believe, is a big fan of the company. Mattel also underperforming on that news, ticker MAT. So you're seeing weak expectations.
What's that?
G.I. Joe?
G.I. Joe, the Kung Fu
Yeah,
Bird.
there we go. I know Paul's a fan of
Sure.
G.I. Joe.
Yeah.
It's interesting, though, if you look at Hasbro year to date, down about 22%, and then you look at Mattel, MAT, it's the ticker symbol on that, up about 2.5% year to date. It's interesting looking at the dynamics when it comes to some of these toy makers this year.
Yeah, exactly. Hey, Bailey, here we are in December. Let's look ahead to 2024. What are the bankers on Wall Street saying about the potential for IPOs next year? Because this year, 2023, was not so good.
We will have a big story this Saturday.
Oh,
but I will give you
yes.
some details ahead of it.
Okay.
When you're talking with the heads at pretty much all big banks, and they mentioned 2025 more than 2024, not really a good signal. It does seem like we're going to see maybe a bit of activity in 1Q, but the big focus is on that March to May kind of region ahead of the election. We have a number of elections in the US, in the UK, and India, really across the world, which drives uncertainty and could maybe keep a lid on some of those offerings.
Interesting.
We had a bunch this year, obviously Kava, ARM, and others, but a lot of them, once they started rolling out, most of them weren't pricing at the high point anymore. They were pricing more at the midpoint. What are you seeing so far with some other companies that potentially could be coming up soon, Bailey?
Yeah, no, the big focus is on valuation, and that's been the kind of topic du jour is, well, really of the year. I don't know how to say topic day year, but the big question has been valuation. Sponsors and management teams still think they're worth what they were in 2020 and 2021, and investors are kind of pointing and saying, look, when we see most of those big tech stocks still down 50% from where they were that went public in that 2-year window, you have to mark down those multiples. So the big focus is on, can you grow into those multiples? If you look at some of the bigger IPOs this year, ARM's up 27% year to date, Birkenstock up 5%, but you do have the likes of Instacart, which is still down 19%. So still very much a divide across, are you profitable? Can you grow into some of those multiples? And can you actually drive value for investors as opposed to kind of people buying at the IPO price and seeing what happened with Birkenstock, where the stock immediately went down but has recouped those losses given the rally we've seen in November.
Again, I shamed the Citibank equity capital markets banker when he was sitting right here. I said, what are you guys doing? The market's up 20%. I could rip a ton of deals out back in the day. And I don't need any anchor investors, whatever those are. I would just pick up the phone, call Boston, call my hedge funds, and get this thing done.
Well, that's the big thing, right? You have the S&P at the highest since 2021,
Right.
I think. I know it's
Yeah.
52-week high, but the kind of date moves. And you've got the VIX at a 12 handle. So fundamentally, it should be time to push these deals out, but investors still very much are scarred. When you look at a stock like Rivian or some of those other big losers, people lost a lot of money buying into the hype.
But they got tons of cash. I don't know. Every 5% move in the market, we pick up the phone.
Every
Every 5% move
I don't disagree. I mean, one guy I think that could be buying some stock is Shohei.
Yep, exactly. He's certainly got the cash. Bailey Lipschutz, thanks so much for joining us. Bailey covers all the markets, and we appreciate that. We were just talking about the Shohei Ohtani deal, $700 million over 10 years. If you do the math, I think that's 70 a year. But he's only taken 2 per year. He's going to defer the rest. What's up with that? I don't know. But John
Who better
Authors,
to bring in?
Who else do we bring in? Let's bring in an Englishman to talk
The
about
encyclopedia.
baseball.
Japanese baseball
player. Exactly. So John Authors joins us, Bloomberg Opinion. I think I understand the time value of money, John. So I could see maybe why the Dodgers would do this deal. Why would the Shohei Ohtani do this deal? Don't I want my money as quickly as I can get it?
First of all, and I'm sure both Shohei Ohtani himself and his advisors understand this, but if you are a 29-year-old Japanese person, you cannot even remember rates as high as 1%. They've been below 1% since just before he turned 2. I checked up. And therefore, for people from Japan, unlike more or less anybody else, the time value of money really does begin to become an academic dead letter. So it shouldn't be, but it's much easier for somebody who's spent all their life in contemporary Japan to say, well, what's the cost of my putting this back for 10 years? Right. At the moment, with the overnight rates actually still very slightly negative, you actually technically gain a bit by doing that if there's no inflation in the interim. So I do think it's important to note that this is the kind of idea that probably does spring from somebody who's lived through Japanification.
Would we see other players potentially use that kind of playbook?
Others deferring isn't new. Mm-hmm. Deferring to this extent, I can't imagine too many people are going to be prepared to leave $68 million on the table every year for 10 years before they start being paid. That is truly it's just extraordinary how much he's prepared to leave behind. I think the critical thing with Ohtani is that he is already, as I understand it, the highest paid celebrity for endorsements in Japan by quite a margin. So he truly doesn't need the money now. Right. Anyway, and the big thing that bothers him, he's played for the Angels, and despite having possibly the two best players in the game together for 5 or 6 years, they've basically not even been a factor. Yep. He really wants to actually win something, and if on this deal, the big advantage for the Dodgers is that for the next 10 years, he isn't costing them that much. They have far more cash in hand, and they can treat this as a very important window and buy other expensive players to go with him. To some extent, it's almost a guarantee to Ohtani that they're going to treat this 10-year window, his time with the team, as a really great time to absolutely go for it. Because they know they're going to be paying $68 million a year, however much that's worth in 10 years' time, for the following decade for somebody to do nothing. So he's going to limit them after this 10-year window.
That's exactly right. Is Major League Baseball okay with this deal? Because it seems like it's a little bit of a dodge on the part of the Dodgers to kind of give them some more capital and spend more.
As I understand it, yes, they are. Deferments, I mean, the very famous case which I mentioned, Bobby Bonilla, who retired in 2002, and the Mets will keep paying him until 2035.
Bobby Bonilla Day, July 1st.
Yes, exactly. Yes. And he gets over $1 million. It's basically they've decided the Mets will just operate a pension fund and pay him $1 million every year safely in his retirement. So it's not unheard of. And we were just talking about possibilities for IPOs and so on. I mean, everybody knows that, or anybody who spent any time in finance knows that messing around with the time value of money, messing around with the discount rate is a time-honored way to make a deal happen which might not have done otherwise. This is an extreme, like the most extreme version of it I've ever come across. But in effect, yes, it's acceptable, and if you trust Jay Powell to keep inflation under control, and you trust the Dodgers not to go bust in the next 20 years, and if you don't want to pay Californian rates of tax and think that maybe you'll go and build baseball in the Cayman Islands or something for 10 years after you've retired from the Dodgers, then this makes a lot of sense. And similarly for the Dodgers, if you really want the chance to go for it now in a very big way, then you can. And I suppose finally, the number says 70 million, but everybody knows that isn't really. 70 million would have been per year would have been vastly ahead of anybody else ever. The number I'm seeing quoted for a discounted rate is more like 46 million, which is still an incredible amount of money for playing a game, but only just the biggest ever. Anybody really understands the time value of money knows that all of this is part of what that contract is really worth. There's nothing that says if it's 70 million per year, it has to be worth 70 million per year in today's dollars now.
Since we have you here in Bloomberg Interactive Brokers Studio, I have to pick your brain leading into the Fed decision tomorrow. How do you view this?
I would be astonished if there is an actual move in rates in either direction. There just isn't a good case to do either. And I think the latest inflation numbers, I would think the Fed would be slightly disappointed with them, because if you look at Supercore, if you look at the trimmed mean, they're stalling at around about 4%, stalling at a rate that shows they've plainly had an effect so far, but still not low enough for the Fed to be comfortable, and certainly not low enough for them to take the risk of cutting. And plainly, the direction of travel is sufficiently clear that there's really no reason to take the risk of hiking. So I would be amazed if they actually changed policy tomorrow. I personally, having been generally more of a hawk on inflation these last couple of years, would encourage them to sound more hawkish. As just when you were talking before, the VIX is very low. The S&P is almost back to its high, which is ridiculous given the amount of anxiety about the economy, and given that the Fed wants tight financial conditions to rein in inflation. If you think that you could just phone up some friends in Boston in hedge funds and do a bunch of IPOs straight away, that, which I think you might well be true, that may well be something you could do. That the mere fact that anybody could say that, even in jest, should suggest to Jay Powell that you can't cut rates yet, that conditions need to be tighter.
If you could ask him a question tomorrow, what would you ask him?
Oh, other than how many championships he thinks Otani is going to get in the next 10 years. I guess that the question is, obviously it's to do with exactly what the reaction function is. Does he think inflation needs to get below 2%? Right. Do we actually need an average of 2%, meaning that it needs to be below 2% for a while, which is a sensible but controversial position. If you were to answer that at all clearly, that could, in either direction, that would make a difference to me.
John Authers, thank you so much. John Authers, Bloomberg Opinion.
Legend.
The Dodgers got stronger. The Yankees have gotten stronger. I haven't seen anything come out of the Boston Red Sox so far this offseason. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it. Shares of Oracle, they are lower after the software maker reported slowing quarterly sales growth in its cloud computing business. Bloomberg's Alex Semenova has more.
Cloud revenue rose 25% to $4.8 billion in the period ended November 30th. That's slower than the 30% gain in the prior quarter. Now, Oracle had been focused on broadening its cloud infrastructure business to compete with the likes of Alphabet, Microsoft, and Amazon, but that initiative hit a bit of a speed bump back in September after a year of accelerating growth.
Oracle is down about 11%. Slumping holiday sales pushing Hasbro to let go of about 1,100 workers, or close to 20% of its workforce, over the next 18 to 24 months. Bloomberg's Abigail Doolittle says it's not a surprise.
In the last quarter that they reported, they highlighted the weakness and the sluggishness. They reduced their gross margin guidance for the year to 13 to 13.5% from 16 to 20%. But it wasn't just a matter of profitability. Revenues also came in. They were down 10% year over year for the guidance. They brought that in relative to the year as well, saying that sales would drop about 15%.
Hasbro down about 3.5%. And consulting giant Ernst & Young is cutting jobs and delaying start dates for some new hires nationwide. Now, according to a statement, the layoffs will affect a, quote, limited number of people in the firm. And one of Goldman Sachs' highest paid executives is stepping down. Sources tell Bloomberg Ed Emerson earned about $100 million over the past 3 years, more than what CEO David Salban made during that same time period.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all advancing right now. 7-point gain in the S&P 500 index, up by about 0.1%. Dow Industrials up 147 points, up now by 0.4%. The NASDAQ Composite Index is up 21 points, up by about 0.1%. 10-year yield 4.22%, with a 2-year 4.70%. Gold down $1.84 the ounce right now to $19.79, drop there of 0.1%. And West Texas Intermediate crude oil now at $68.50 a barrel. WTI is dropping by 4%. Wall Street, meanwhile, having a hard time finding solid ground after underwhelming inflation data reinforced speculation that the Fed will be in no rush to declare mission accomplished. So again, the Dow, the S&P, NASDAQ are all advancing. Right now, the S&P is up 7, a gain there of just about 0.1%. Bitcoin higher, little changed, up $31 right now, 41,213 on Bitcoin. Rocket Companies wants to merge everyday grocery runs with house hunting, using artificial intelligence with cars' infotainment systems to entice buyers back into the nation's stagnant housing market. The firm's Rocket Homes business is tapping Apple's CarPlay to feature properties for sale on a car's dashboard screen as a consumer drives by, displayed via the Rocket Homes app. Again, recapping, stocks higher, S&P up 7, a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Brad Case joins us. He's Chief Economist and Director of Research at Middleburg Communities. Joins us here in our Bloomberg Interactive Brokers studio. Brad, you were just saying off air that you guys at Middleburg Communities have sold most of your communities, most of your assets, most of your inventory. Tell us about that decision.
Yeah, we're very active developers of rental housing communities, and we've been in that situation. You know, we've been around doing that for 17 years, something like that. But 2021 and early 2022 was kind of a golden moment to be selling assets. So we sold literally everything we owned, and we are still actively developing. We've got about a dozen under construction at the moment, but or at least I think under construction. But yeah, we sold at the top of the market. That was nice.
That was, I mean, I thought I sold at the top of the
Right.
market, but that is, I mean, that's unusual, isn't it?
No, and honestly, it is a little bit unusual because developers love their buildings, and a lot of them just don't want to sell, even if the prices are great. So one of the things that I really like about this company is that they're in it to make money. They're not in it to show off their trophies.
So what's a typical community for Middleburg Communities? What's a typical type of development?
So we call them middle market class A. They're not luxury, they're not high rise, they're not like located on the beach. They are in sort of suburban areas of major cities in the southeastern part of the country. It'll be like 8 buildings with 250 rental housing units, and some of them are multifamily, some of them are single family, build to rent, where it's not scattered site. You're not owning a house. You are renting a house within a community with the same sorts of amenities.
You had a piece that you sent to us talking about how, if you look back over the past 50 years of data that you were crunching, renting is usually better investment than when it comes to buying. But isn't there an investment case when it comes to buying?
Oh, absolutely, there is. But people tend to forget that if you buy, you are taking a big chunk of money and paying it to somebody for a down payment. And that's money that you could otherwise be investing in the stock market. And so when you rent, you don't have to give up that big pile of money in the market in the beginning. So you can rent a place and take that big down payment and instead put it in the stock market, and typically you've been better off, historically speaking. And so people have to understand that when they are making the decision to buy or to rent, it's not just that. It's, is there another good use for this money? Right now, for example, the only thing that makes buying look good is that the stock market is so overvalued. If the stock market, were more fairly valued, then you'd really want to rent, because you wouldn't want to be giving up that money that you could be putting into stocks.
All right, so let's talk about your call on the economy here. we're going to hear from the Fed tomorrow. Inflation is trending down. I don't see a recession. What am I missing?
So I think there's not a very strong probability of a recession, and this is something I've been saying for 2 years, and a lot of people have been calling recession, and there just simply hasn't been data suggesting a recession. What we had last month, though, is one of the most important variables, which is housing construction. Has really been on a downward trend, and historically speaking, that's one of the things that does tend to predict a recession. So just over the last few days, I've updated my recession forecasting model, and the probability that a recession will start in the next year went up from about 33% to 47%.
Okay.
Looking at your bio, you used to be working on the Federal Reserve Board as an economist. Can you walk us through typically when there's a two-day meeting at the Federal Reserve, how that process goes on in the presentations that go forward as far as trying to gauge the economy? Since this is the meeting, we'll get the quarterly updates for the economy as well as the dot plots.
Yeah, you have to know that at the Fed there are something like 250 PhD economists. And at the various other Federal Reserve banks around the country, they also have economists on staff, and they're trying to look at all parts of the economy. I remember once when I was in a meeting, and Alan Greenspan was the chair of the Fed at that time, and there was something.
Briefcase indicator.
Yeah, exactly. There was something that had happened with beef prices, and he said, who can tell me why beef prices have been doing this? And a PhD economist stood up and said, I am the specialist on beef herds. It just blows your mind to understand. It's not like 250 people are forming their opinion about the overall economy. They're forming their opinion about one tiny piece of it and feeding it to the decision makers. So it really is an extraordinary amount of data and expertise sort of helping them understand what are the stakes in the decisions they're making.
So what do you think the economists are telling Fed Chairman Powell as he gets ready for his meeting?
Well, there are real risks in the economy. One of the most important is the housing market. The Dallas Fed, for example, produces what they call an exuberance indicator. And that shows whether the housing market seems to be in a bubble. And yeah, it's flashing red, or the last few months, the last few quarters, it's been flashing red or yellow every quarter. So that is a risk that they look at.
Because we just had a real estate agent here, and she covers Westchester County, Scarsdale, some very, very good areas, and she said it is still crazy bidding wars.
Absolutely, and that's what was happening back in 2005, 2006, before the big mortgage market meltdown. So one of the real risks is that house prices start going down again. I don't think it would be anything like what we saw in 2007 to 2009, because we haven't had the kind of idiocy that we had back then. But that is one of the risks to the economy.
How challenging is it coming out of the pandemic when there's really not a lot of historical precedents to give this? Because it seems like everybody's gotten it wrong as far as their calls to be in a recession over the past 18 months. Paul and I have talked so much about, and people have been so wrong about it.
Yeah, it's one of the things that you have to keep in mind when things are disrupted is that the data that the Fed members are using to keep track of the economy, that gets disrupted too. That's in fact one of the things that, if the federal government goes into a shutdown, like there is some concern that they may do early next year, that's one of the things that gets affected by a shutdown. So the pandemic really disrupted the flow of data that the Fed uses to make decisions, but also that people like my company use to make that kind of decision too.
So there's an ECFC function in the terminal that is the consensus for economists that are polled by Bloomberg. There's still a 50% chance when you're looking at this of a probability of a recession, which seems relatively high compared to estimates, say, at Goldman Sachs economists and some other firms on Wall Street. What is the catalyst that is making people so pessimistic? Because when you're looking at consumer spending numbers, it's obviously more than 2/3 of what's powering the economy, still very strong and resilient.
Look, the most important piece of the economy is the labor markets, and they have continued to be strong and resilient, and that drives income growth, that drives consumption growth. So you're right; those are the most important things, and they're very healthy. As I said, sort of the weakest thing that I'm seeing right now is the construction numbers, the housing construction numbers, both single family, but especially over the last few months, multifamily, and that's nationwide. And part of that is because interest rates have gone up, but honestly, The bigger problem is that for years interest rates were so low that any idiot could get into the housing construction business, and plenty of them did. And so if we go into a recession over the next year, it seems to me the most likely reason is that there were too many houses built by those idiots back in those days, and that weakens the entire economy. So actually, you don't want to be in a situation where interest rates are especially low. You want to be in a situation where it's hard to figure out, like it's hard to make a project work. Because in that case, the idiots are out of the market. The only people who make the projects work are the people who can do it well and can do it even when the economy turns south.
So just about 30 seconds. You guys are constructing some properties now, but you're financing at higher rates, right?
Absolutely. We're financing at higher rates, and the biggest problem is it's just more difficult to get the financing. So we have to work harder. That's the way it should be.
Yep.
It shouldn't be easy for us to get financing. But you know, one of our really good projects, for example, is in a secondary market, and some of the financing sources just say we want to be only in the biggest cities now.
Yep, interesting. Brad Case, thanks so much for joining us. Brad Case, he's the Chief Economist and Director of Research at Middleburg Communities, and it's just a fascinating story. They were sellers in 2021, 22, as was I. I thought I was the only smart person out there, but again, a good move there. So S&P 500 up 0.2%. Let's head down to Washington, D.C. right now. We'll get world and national news with Nancy Lyons.
Thanks, Paul. It is unclear how successful Ukraine's President Volodymyr Zelensky will be after meeting today with lawmakers and President Biden. It's his third visit to Washington since Russia invaded his country. Senate Majority Leader Chuck Schumer says Zelensky made a convincing argument to lawmakers this morning.
President Zelensky made it so clear how he needs help, but if he gets the help, he can win this war. And he outlined in some great detail, the kind of help he needs, and how it will help him win.
Schumer says the U.S. cannot let Russia be the one that wins. GOP lawmakers insist that any aid to Ukraine must hinge on whether they can reach consensus on immigration reforms at the U.S. border. Israel's war with Hamas is also a battle for hearts and minds, and when it comes to support for the Palestinian militant group in Gaza, cracks may be starting to form. Bloomberg's Israel bureau chief Ethan Bronner is in Tel Aviv.
You have people on social media and also on kind of broadcast speaking aloud about how angry they are that Hamas is taking care of itself and not worrying about provisions and humanitarian aid getting to the people.
Bloomberg's Ethan Bronner reporting from Tel Aviv. Harvard's governing board has voted to keep Claudine Gay as the school's president. Gay has faced calls for her resignation and her firing after her appearance before a congressional committee to discuss anti-Semitism on campus. She and other Ivy League school leaders faced criticism for their answers to questions specifically about whether calls for genocide of Jews violate school rules. In a statement, Harvard's board says Gay has apologized for how she handled her congressional testimony. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks advancing, the Dow, the S&P, and NASDAQ all moving higher. 8-point gain right now for the S&P 500 index. We have got the Dow Jones Industrial Average higher by 148 points, while the NASDAQ Composite Index is up 29. The NASDAQ 100 Index up 52. For that index, that is a gain right now of about 0.3%. CPI Tuesday, 10-year yield 4.23%, with a 2-year that's yielding 4.71%. Gold down $3 the ounce to $19.78, down by about 0.2%. And West Texas Intermediate crude oil is trading lower now, dropping 4.1%. WTI $68.38 a barrel on WTI. Consumer prices picked up in November, reinforcing the Fed's resolve to keep interest rates elevated in the near term. The so-called core consumer price index, which excludes food and energy costs, increased by 0.3%, following a 0.2% advance in October. So again, recapping, stocks are higher with the S&P up 8, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Paul Sweeney here in the Bloomberg Interactive Brokers studio. How about we talk about some individual stocks, Paul? Who better to do this with? David Katz, President and CIO at Matrix Asset Advisors, joining us on Zoom to discuss some stock picks of his, as well as market reaction to geopolitical risks. Thanks so much for joining us again, David. It's always a pleasure speaking with you. Walk us through some of your top picks.
So we think looking at 2024, you want to focus on very good businesses that have not performed in 2023. The market's up a lot this year, but there are a lot of sectors, a lot of stocks that have done poorly. So starting out, Air Products, a very good long-term play, 10% earnings growth, 10% dividend growth, is having a good year. Firm next year, stock sold off about 15% on some very short-term concerns. CEO bought $5.5 million worth of stock on that sell-off. We think that's a great tell for investors. We'd be stepping in here. Other names, in technology, Cisco has really lagged the market over the last year. When technology has been on fire, Cisco's lagged. Healthcare has been a poor place. We think Medtronic and Pfizer are both really good businesses, very attractive valuations. We think 2024 is going to be the year of dividend plays again. They really lagged a lot this year. So the companies that I just mentioned are all good dividend payers. NextEra Energy, also in the utility sector, a very good place to be.
I have to say, though, anybody watching on YouTube, I like the terminal background with the monitors that you've got going on there, David.
The Bloomberg.
Absolutely. It's the best information in the world.
Exactly. Hey, David, I mean, unlike Jess Minton, I did not own those mystical, magical 7 stocks. So do I chase them? Do I chase big tech? Do I chase the AI story as a long-term story? Or do I, again, as you suggested, try to find some of those quality names that have not participated?
We would not chase it. We have a value portfolio, and in the value portfolio, we own 5 of the Magnificent 7. We like them a lot. We liked them a lot last year after they had a very bad year. We thought they were positioned for a strong 2023. We still own them, but we're much less enthusiastic about them going forward. They'll do fine, but they're fairly priced right now. So we would not be plowing new money into them. We would look at other places that really have lagged but are poised to play catch-up. Some of those names that I just talked with you about. Within technology, I'd mentioned Cisco, also Qualcomm or Texas Instruments. The businesses are doing fine, but they massively lagged the market this year. They've massively lagged technology. We think those are going to be places that you'll make more money next year than some of the hottest stocks today.
How challenging was the performance for the value portfolio this year after you had such a big run in the Magnificent 7 stocks?
So we have 2 strategies, value and dividends. The value strategy, because it owned 5 of those 7, is having a pretty good year. The dividend strategy, which held up great in 2022, is suffering this year, along with all dividend strategies. We think that sets the stage for a much better next year. But in terms of dividends, not up low to mid single digits. And if you look at the market, it's a have or have not market. Growth funds are up 25, 35, 40%. S&P's up 20%. Russell value is only up about 7%. The equally weighted S&P 500 is up 8%. There are lots of sectors like utilities, healthcare that are down or flat for the year. So it's a really odd market this year for that. And as I mentioned earlier, we think the best places to make money next year are the things that really lag this year, as long as they're good areas, good industries on a long-term basis.
David, how about fixed income? I can sit there, and lock up my money for 2 years and get 4.7%. It was just at 5%. That doesn't seem like a bad place to be. How are you guys thinking about fixed income?
It's a great place to be. So fixed income over the last decade returned about 1.5% a year, which is miserable. You're finally getting a good income stream and good yield right now. So we think that bonds are finally going to be a positive contributor to portfolios. We like fixed income, but we still would stay fairly short, like 1 to 4 years. And again, we wouldn't take all your stock money out and put it into bonds, but for your bond component and for a balanced portfolio, we finally have reasonable expectations on the fixed income side. We would not chase long-term bonds, and we would not chase low credit quality. Use your fixed income for certainty, stability, get that 4.5 to 5% income, and balance that with growth in the stock market.
How do you view small caps?
So we like small caps a lot. That's another area that did poorly in 2022 and has lagged a lot in 2023. From a valuation perspective, relative to large caps, they're about as inexpensive as they've been in a decade. On an absolute basis, you've got a lot of small cap stocks at 11 to 13 times earnings. So we think they're going to be doing very well in the upcoming year. We think we're going to likely avoid a recession. It's going to be a soft landing. We do think the Fed is done raising rates, and they will start to lower rates at some point next year. And we think in that environment, small caps are due for a pretty significant bounce back. They were having a miserable year through October and really have rallied in the last month and a little. We think that's very early on, and there's going to be a good period of catch-up performance there.
One of the names that jumps off the list is Pfizer. Obviously, one of the COVID stocks, if you will, having reached a high of 60. It's now trading below 30. It's down 44% year to date. What's the thought there? I mean, I guess it's one obviously has the hangover from the COVID vaccine, which thank goodness they came through with. Now it's kind of what's next for them. So what's next for you with Pfizer?
So that's a great question. So Pfizer at 60 was pretty expensive. At 30, because it has done so poorly this year because of the COVID hangover, it now sells at a great valuation. It's at about 9.5 or 10 times earnings. It's paying a 5.7% dividend, which they've said they are going to grow over the next few years. They probably will raise the dividend a little bit tomorrow or sometime this week. So you're getting a very good yield. We think at some point things are going to break better for the drug company. They should start to grow earnings again. They're managing their costs, and you're just getting it at a great price. So we've owned a number of drug companies. The ones that are doing well, usually it happens out of nowhere. And when they get to 13 or 14 times earnings, we're less enthusiastic. Pfizer's one of the few that hasn't rallied at all, so we think it's ready to rally. We think very well positioned for 2024, mostly from a valuation basis.
Hey, David, we only have about a minute left, but something I was thinking about, because it seems the more people we're speaking with, especially portfolio managers, they feel like the lagging sectors from this year will outperform next year. But especially when you think over the last decade, there were times where, especially big techs, continued to outperform despite narrow concentration, and a lot of people missed out. What's the risk, do you think, to maybe your call and others who think that there'll be a flip there?
We think that ultimately gravity, pulls back valuation. So we think there's probably a fairly low risk to our call, unless the market gets into a 1999 or 2000 type market where valuations just don't matter and the stocks go up another 30% and a really stretched valuation wise. We just don't see it. We think that like last year, there's going to be a flip. And we think you want to position yourself in front of it. And we think if we're wrong, you're going to still make money. You just won't make as much money.
All right, David, thanks so much for joining us. Always appreciate getting your thoughts. David Katz, he's the president and chief investment officer of Matrix Asset Advisors, joining us here. And he said, take a look at some of those big growth names that maybe did not participate in the rally, maybe weren't part of that relatively narrow band of tech stocks that have performed so well and driven the index. Maybe take a look at them in 2024. S&P 500 up 0.1%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Boston-based State Street is laying off about 1,500 workers before the end of the year. The Boston Globe reports the cuts were announced today at the Goldman Sachs U.S. Financial Services Conference. Now, the reductions mean a more than 3.5% loss in its workforce. Right now, State Street is up nearly 1%. Shares of Alphabet, they're lower after a federal court jury in San Francisco ruled in favor of Epic Games, deciding that Google holds monopoly power through its App Store. Bloomberg's Ed Ludlow explains what's next.
The judge who presided over this case will have to decide whether or not to enforce a change of policy for Google to allow app distribution outside of Google Play and another means of payment outside of Google Play. Our colleagues at Bloomberg Intelligence estimate that if that were to be the case, there would be a headwind to growth of 1 to 2 percentage points. Overall, the download or app market across Google and Apple is $200 billion a year.
Alphabet is down nearly 1%. ARK's Kathy Wood has boosted her stake in Microsoft and Meta. Bloomberg's Katie Greifeld has the breakdown.
Let's start with Kathy Wood buying Microsoft and Meta in the ARK Next Generation ETF. We're talking about pretty small numbers in dollar amounts, just over $3 million a piece for those shares. But this was the first time that ARK has bought Microsoft in 9 months, the first time that ARK has bought Meta in 5 months. So clearly some demand returning there.
We have Meta is up about 1%, just over 1%. Microsoft is up just a fraction. Meanwhile, Warren Buffett's Berkshire Hathaway cut its HP holdings by nearly 50% over just the past couple of months. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we got a little bit of green on the screen. S&P 500 up 1/10%. The Dow's up about 0.3%. NASDAQ up about 0.2%. So a little bit of a lift here. Yields, they are pretty steady here. The 10-year Treasury yielding 4.23%. WTI crude oil, another down day, down 4.2% on WTI crude, now just above $68 per barrel. Bitcoin off 1%, 40,700 on the Bitcoin. Right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news for us next.
Thanks, Paul. Ukraine's President Volodymyr Zelensky is hoping he's changed the minds of some Republican lawmakers on providing more aid to his country. He met this morning with members of Congress to urge support of a new U.S. aid package, but Republican Congressman Chip Roy says he needs to see border reforms before approving any bill.
You have a fundamental duty to secure the border of the United States, first and foremost. Do it. This is non-negotiable. I don't know how clear I need to be about that.
Congressman Chip Roy, Senate Majority Leader Chuck Schumer says Zelensky's plea for help was very powerful. Well, the House is expected to vote tomorrow to formalize the impeachment inquiry of President Biden. During a GOP news conference today, Speaker Mike Johnson told reporters lawmakers have an obligation to follow through.
We've come to this impasse where following the facts where they lead is hitting a stone wall because the White House is impeding that investigation now. They're not allowing witnesses to come forward and thousands of pages of documents. So we have no choice. To fulfill our constitutional responsibility, we have to take the next step.
House Speaker Mike Johnson says the decision to move forward has nothing to do with politics. The White House says the inquiry up to this point has not been valid since there was no formal authorization vote by the House. Another vote on a proposed humanitarian ceasefire between Israel and Hamas is expected today in the United Nations. Around 90% of Gaza's population has been displaced since the war began. A vote last week failed to pass when the U.S. was the lone no vote. New consumer price numbers show a slight bump in inflation. The Labor Department says the Consumer Price Index rose 0.1% in November. The core CPI, which excludes food and energy, rose 0.3% last month. Some believe the news will be well received by the Federal Reserve that's holding its two-day meeting beginning today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Paul and Jess.
All right, Nancy, thank you so much. We appreciate that. SBF's lawyer says client was worst witness he's ever seen. That's a nice article.
Yeah, story crossing the terminal here. So Sam Bankman-Fried went off script when he took the stand. So this is kind of a enterprise story here on the Bloomberg looking at this. But the view of David Mills, the behind-the-scenes architect of FTX co-founder's defense trial here. And as we know, we're still waiting for sentencing that is scheduled for March after Sam Bankman-Fried was convicted earlier this year. So looking at this, but not that Mills. So he's 76 years old. He thinks a better performance by Bankman-Fried would have prevented the jury from finding him guilty of stealing billions of dollars from FTX customers, which it did in a matter of hours when they went through and convicted him. But waiting for that conviction, but obviously looking at what the sentencing could be in the coming months.
I mean, here's a great quote from his lawyer, David Mills. Quote, he may be at the very top of the list as the worst person I've ever seen do a cross-examination, says Mills, a Stanford Law School colleague and a close friend of Bankman-Fried's parents. And he also goes on to say, I probably shouldn't have represented this guy. It's too close family-wise, and that's not, maybe keep an arm's length.
Complicated situation there.
Yeah, exactly. So anyway, so he's been convicted, but we're waiting for the sentencing, right?
Correct. So that goes until March. So Sam Bankman-Fried is back in prison right now.
Yeah. So it'd be interesting to see how this plays out because it seems, I mean, the dollar amounts are just staggering. And you wonder just, how aggressive they're going to be on the sentencing here.
Yeah, no, this is going to be a big deal. He's actually being held in Brooklyn. So he's going to be there for a while now until that sentencing later in the spring.
All right, we'll keep an eye on that. S&P 500 up 0.1%, the NASDAQ up 0.2%. So we have that. We'll keep an eye on those markets for you. Coming up right now, Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
President Zelensky makes the ask face to face. Welcome to the fastest show in politics as the Ukrainian leader meets with skeptical lawmakers in both chambers today and prepares for a joint news conference a bit later on with President Biden. Will any of this make any difference? Unclear. We'll have the latest from Capitol Hill with insights today from Congressman Jonathan Jackson. The Democrat from Chicago serves on the Foreign Affairs Committee. Will weigh in on the funding debate for both Israel and Ukraine, both still unresolved. The latest CPI shows inflation cooling as we head into the next Fed meeting, and an impeachment inquiry into Joe Biden could be formalized as soon as tomorrow. We've got a lot to talk about with our political panel. Jeannie Shanzano is with us, Democratic analyst, Bloomberg politics contributor, joined by Republican strategist Chapin Fay, former press secretary for former New York Governor George Pataki. So let's wind it up. We've got a lot to cover after an update on the markets with Charlie Pellet. He's in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We have got the Dow, the S&P, NASDAQ holding on to gains right now, with the S&P up by 5 to 46.27, a gain now of just about 0.1%. Dow Industrials up 97, up 0.3%. The NASDAQ Composite Index up 27. That is a gain right now of just about 0.2%. NASDAQ 100 Index pushing higher by 49 points, up now by 0.3%. Wall Street is having a hard time finding solid ground after underwhelming inflation data reinforced speculation that the Fed will be in no rush to declare mission accomplished. 10-year yield at 4.22%, 2-year 4.70%. Spot gold down 0.1%, 1979 the ounce, and West Texas Intermediate crude now dropping 4.1%, 68.40 for a barrel of WTI. CPI report is behind us. It is on to producer prices and the Fed decision tomorrow, and then retail sales data on Thursday. Dana Peterson is chief economist at the Conference Board.
Real wages are rising, and certainly it's supporting consumer spending. But when we ask consumers how they feel, they're still complaining about inflation. They're still saying that everything's too expensive. Interest rates are rising, so that means if you wanted to buy that car, a refrigerator is going to cost more. So I would expect that even though real wages are rising, inflation is still there, and consumers are probably going to start pulling back on spending.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. How about Boeing as an economic indicator? It is. Boeing delivered 45 of its 737 family jets in November, its largest such tally in 5 months, leaving the manufacturer just 24 aircraft short of its revised annual target. Boeing shares down less than 0.1%. Again, recapping, stocks are holding on to gains. Midday here, we have got the S&P up 9, gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we thank you as always. Welcome to the Tuesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where it's all about Ukraine today. That's certainly the storyline so far, and that's going to continue to develop as President Zelensky, as we told you, in person today in the nation's capital, will make his way from the Capitol to the other end of Pennsylvania Avenue in a bilateral meeting followed by a news conference with Joe Biden. We will get there. That's a few hours off. In fact, we'll carry it live when these two get in front of reporters later on today. So far, it's about Congress, though, and a very skeptical Republican conference in the House, as opposed to the one in the Senate. Remember, Mitch McConnell and Chuck Schumer invited President Zelensky here to make the case today. An all-senators briefing, and then the one-on-one with Speaker Mike Johnson, who just stood in front of the microphones to talk to reporters coming out of that meeting, knowing that he has been skeptical, that he is not looking to send a blank check to Ukraine, and in fact is pursuing this deal on border security that is also being pursued in the Senate that would somehow unlock Ukraine funding. That was not, however, the first condition that he rolled out when reporters asked him about his wariness of sending more money to Ukraine. Here's Speaker Mike Johnson.
I have asked the White House since the day that I was handed the gavel as Speaker for clarity. We need a clear articulation of the strategy to allow Ukraine to win. And thus far, their responses have been insufficient. They have not provided us the clarity and the detail that we requested over and over since literally 24 hours after I was handed the gavel as Speaker of the House. And so what the Biden administration seems to be asking for is billions of additional dollars with no appropriate oversight, no clear strategy to win, and none of the answers that I think the American people are owed.
Then I guess there's the border. Now, to be fair, Speaker Johnson has been making that case and asking those questions. But we thought that this money would be unlocked with or without conditions for Ukraine, with or without a strategy to win, as he says, if there was a deal on the border. And that's where we start our conversation with Congressman Jonathan Jackson, the Democrat from Illinois' first. Great city of Chicago. Congressman, it's good to see you on Bloomberg. We welcome you from your perch on the Foreign Affairs Committee. I wonder your thoughts today on what you heard from Speaker Johnson. Will Ukraine ever get this money?
Well, I certainly hope so, but I would also like to, for this money to go through the normal process. There's a check and balance in place, and we've been duly elected by our constituents to be here, to be a part of that balance. This is part of our congressional responsibility. By going around our Congress and bypassing money to go to Israel or to not let us have a robust debate about Ukraine, what does peace look like? How do you measure it? Can we have equal parts diplomacy as well as defense? Like, can we all get to the table? I imagine that's like a growing frustration. And then there are limits. We have, of course, $33 trillion in national debt. We have $2 trillion in a growing deficit. And we have some serious needs at home. So I think the high mark of America being able to write blank checks may be behind us at this moment. And so we have to be very much responsive to our constituents at home. We have issues in water systems and housing. We just can't have it one way for all military and not understanding the strength of our diplomacy. And where does this end? How do we achieve peace? And how do we achieve compromise? That should also be on the table.
Have you heard from the White House on this, Congressman? Because Joe Biden's obviously making the case here for our own national security, and in fact was the one who injected the border debate into this funding request that came from the White House for Ukraine, Israel, and Taiwan. We're going to, of course, see a news conference later with Joe Biden and President Zelensky. Is there any answer he could give you that would satisfy you in terms of strategy, knowing that, well, we don't know if Ukraine can beat Russia, do we?
Well, I think this is where the issue is. I mean, we have to go back to the original. What was Russia's initial concern? I would say that they were wrong to cross over the border and go into Ukraine. But when they were talking about the Donbass region and going to the eastern part, they said they have stopped teaching the Russian language in a province, in a region that did speak Russian. They were also saying that they have a, if you will, a bomb phobia. They did not want to see missiles at their front door. They did not want to see Ukraine joining NATO. And if we go back to recent history, in World War II, we know that 22 million Russians were killed, and they were like, stop expanding NATO. NATO has continually been expanding and going into Eastern Europe. And now when it got to Russia's doorstep, they said enough. So I'd like for us to take a pause, go back and revisit this and find out where there are borders. These borders now are less than 30 years old. There are border disputes that we can see that are going on all around the world, it seems like, at the same time. And I do think that it's time for us to think that we're quick to jump into military action without exhausting all of our opportunities to have diplomacy. I'm for a strong defense with an equal part of diplomacy, with an equal part of development. I like to do a trifecta: diplomacy, development, and defense, not so quick to have an endless amount of war. Now we're over $100 billion into the Ukraine. This is another $64 billion package. They thought this would be a 1 month issue, thought this would go on possibly for 6 months. And like Russia's now, their economy is getting stronger. as a result of the as a result of the sanctions. They're increasing their ties with Iran. They've increased their ties with like China. So I want to see America's playing field get bigger and not smaller. The more people we cut off from our foreign policy, the stronger we're making our adversaries.
Well, you just said a lot, Congressman. I'd love to unpack some of that because I realize these are recently drawn borders, but they were also agreed to by Russia. Should the U.S. not have come to the defense of Ukraine to begin with because of that reason? And the fact that we have not put any American boots on the ground or in harm's way is something that the Biden administration has been trumping. We've made a huge dent in the Russian military by way of this proxy war, if we can call it that. Are there no benefits to U.S. national security there?
Oh, absolutely, there is. We have to stop aggression at all levels. We have to, I think us defending Ukraine was the right thing to do. And now I think it's time to revisit it. This is a very substantial army. They have an enormous amount of resources, and we have to measure it. Are we going to scale back what we would consider not to be our ideal desire for Ukraine to have recaptured all the land versus when do we start saving lives and preserving what we have? There comes a point where there is a law of diminishing returns on how many more bombs for how many more inches of land. Ukraine and Belarus, and that entire region is very important to the world. It's a breadbasket. In the meantime, there's other unintended consequences. There are other countries that suffer. So I'm trying not to look at this through a keyhole, but through the door. That we saw a spike in worldwide food prices, and my ultimate goal is to get back to peace. I don't want to bomb my way into a solution. That I don't see a very good end.
Well, that would suggest that there's a diplomatic solution possible. Do you believe that Vladimir Putin is capable of such a thing?
I think everyone is, and I'm a first-term freshman congressman. Call me naive, if you will. I'm fine with that, but I do believe in continuously being a peacemaker, continually trying to exhaust peaceful means. I'm sure that the body count that's going up in Russia is substantial. The body count that's gone up in Ukraine is substantial and exhausting. The people that have fled the country has been enormous. The land can get now contaminated with the amount of bombs. So it has reached a point of what's left and how do we move forward? So at what point do we have any sort of pause, if you will, any sort of truce and try to get back to the table? What does that look like? I don't know. But I do know we have to continue to talk. I was in a foreign affairs meeting and I asked, who is talking to President Putin? Who's talking to President Putin? And they said there were some backdoor channels. I said, well, I'd like to see the front door. I'd like to see the President Biden and possibly President Putin try to get together to talk face to face, man to man, eye to eye. I will not stop until peace is exhausted, the possibility of peace. We have to believe in peace in order to achieve it.
Well, I would certainly never call you naive, Congressman, but I wonder if it makes you uncomfortable that you're agreeing with some members of the conservative right in the Republican conference, the Marjorie Taylor Greens who say not another dollar, J.D. Vance says it's time for accountability, and it sounds like you're keeping company with them from a policy standpoint. Do you disagree?
I've not followed all of their policies. Some of the persons you mentioned are not on foreign affairs. I'm looking at the information as I've received it. I've got an enormous amount of respect for many of my colleagues. People have come here to be representatives, and we're seeing a lot of the same facts. So if we end up with the same conclusion, having seen the same facts, I think that's progress. I don't like to go into an ideological bucket or lane, or let's get to what's right versus what's wrong.
We're spending time with Congressman Jonathan Jackson, Democrat from Illinois, as I look at headlines coming from the president today. He was at a fundraiser a short time ago, Congressman, and I'd like to get your take on funding for Israel as well, because the president's making news here. I can't play it for you. This was not something that we could record, but he says Benjamin Netanyahu and the Israeli government are starting to lose support, which is pretty remarkable to hear. Joe Biden says Netanyahu is a good friend, but I believe he has to change. Do you agree?
Oh, absolutely. And I think the benefit of having a special relationship, having a friendship, is you can tell your friends things that are inconvenient, things that are uncomfortable, but you can tell them the truth. I had the opportunity to go to Israel in September with the Congressional Black Caucus and AIPAC. We were in a meeting with the Prime Minister, Mr. Netanyahu. I specifically asked a question regarding the Palestinian visa waiver program, the reciprocal visa waiver program. And that simply was, if a person has a blue passport, Mrs. Condoleezza Rice was on this program as well. A blue passport is a blue passport. If you're an American citizen and our country has a visa waiver reciprocal program with you, you honor our visa like we honors yours. The Palestinian constituents in my district were having a problem going into Tel Aviv and on to visit their family in the West Bank and Gaza. I specifically asked Mr. Netanyahu about that. He deflected. He had two of his other persons answer the questions. So I didn't think he was answering with much candor. I think that President Biden is telling them the truth, that if 103 countries have said ceasefire now, if the United States, that is your special friend, is the only one that goes against everyone in the Security Council, and you're still going forward, the humanitarian crisis is unfolding before our very eyes. When you see babies now that are missing limbs, when you see people that are missing water, that are lacking water, when medical supplies are no longer aiding, when you see that we have hostages.
Should we not send money then to Israel? Does Israel really need more money from the U.S.?
Well, that's the second part of the question. First, I want to get the hostages out. And you can't get the hostages out while you're seeking revenge. You have to seek reconciliation or revenge. When I first signed on the ceasefire, I was seeking reconciliation so we could prioritize the hostages. I felt for all those families that were in the streets of Israel that were asking for their family members to be returned. I don't want to see one of them killed because of collateral damage. That's another death that's unnecessary. When you see 2-to-1 children and women are dying, that's wrong. Even when you saw George Bush go into Afghanistan, he gave us a deck of cards to tell us who he was looking for when he went into Iraq. Like, who is Hamas and how many people? They're saying it's 20,000, 30,000. I've heard the Israeli Defense Force director say if we're killing only 2-to-1 of civilians, that's not bad. Where did that calculation come from? That's wrong. So I do think that President Biden has to have an uncomfortable conversation with Mr. Netanyahu to tell him the truth. I am pro-Israel. I'm pro their defense. I do have concerns about Mr. Netanyahu's leadership. I don't think he's serving the interests of the people the best.
Well, this has been a fascinating conversation, Congressman. I appreciate your honesty and your generosity with time here, because we don't have a lot of Democrats speaking specifically to Ukraine the way that you are now. And I wonder, before you leave us, when you look at this menu, we've talked about 2 items on a very long menu of items to be taken care of by this Congress. It looks like you are going to be going on to holiday recess at the end of this week. That leaves funding for the government, these supplemental requests we've discussed, a deal on the border, extensions for FISA and the FAA, all into next year. Unless you tell me, can the House do anything in the next few days?
I doubt it. I'm hopeful, but on that, I think I'll be pragmatic and say I don't see it. That there is an extreme faction within the Republican Party that really doesn't want to govern. They don't mind seeing the government shut down. We've seen them take the government to the edge with the spending cap, with the debt ceiling. We've seen them take the government to the spending brink with the appropriations for September. Speaker McCarthy did the right thing in avoiding the government shutdown and bringing the bill to the floor, and they took his head off. I mean, like, he was putting country first. I think some other people in the party need to think about country first and lose the hard line. No one's going to get everything that they want. Let's put America first. Let's move the country, our national security, our friends and allies, and let's take humane priorities abroad. What's happening in the West Bank, in the settlement, what's happening in Gaza has to stop. 17,000 people have died. The death toll is mounting. Now there's disease and humanitarian crisis. Reconciliation, I believe, is the only path forward. And you asked about the specific funding for Israel. They do need stronger defense. Do you know when we started on October 7th, the United States did not have a confirmed ambassador from the United States to Israel in place. We did not have a confirmed ambassador from the United States to Egypt in place. So there was no place for the Palestinians to go. So our diplomacy was down. When Mr. Austin went over there with the gunboat, we didn't have our diplomacy in place. So we did not have a development plan. I've never seen Mr. Netanyahu speak aggressively, forcibly about being a peacemaker and talking about a Palestinian development plan. He's never sought a two-state solution. So I want to see peace in the region. I want to see children, the next time I go over there, God willing, playing together, not building up a bigger perimeter, a bigger border. But that only starts with the pathway through
at the same time, Congressman, and I know I'm way over time here, but I can't get enough of the back and forth sometimes here.
I can't get enough of you either.
Well, God bless you. Nobody was telling us what to do after 9/11 early, and if they did, we weren't listening very closely. Does that mean something to you when you consider what Israel just went through on October 7? This was like multiple 9/11s for them, and they think they need to root out evil here just across the border. Imagine if that happened in Canada and what the heck we would do about it, right?
Well, think about it. So what's a lesson learned that we figured out from Afghanistan after 9/11? First of all, we went to go after bin Laden, which isn't an army, which is a spirit, which is a sect and a group. $2 trillion later, 20 years later, we leave Afghanistan having to leave all of our guns and boats and planes, everything behind, only to find that Osama bin Laden was in Pakistan watching Netflix, I guess, or some of the TV cable program in a compound across the street from like a military base. Give me a break. I mean, so intelligence is the way. When this started on October 7th, we all agreed this was an intelligence failure. Let's not deflect. Let's beef up the intelligence. Look at what happened in Rwanda on that trip to Israel. I went to Rwanda after we left Israel. And Rwanda had lost 1 million residents in 100 days. They arrested 30,000 people. They've been locked up for 30 years. Rwandan intelligence. Rwanda now is the 4th largest group that sends peacekeepers into the United Nations. And they have an economy that's thriving, and they've sought certain peace with their neighbors. They had 5 million people to die in a civil war, if you will, with the Congo. So be it in Israel, be it in Rwanda, be it in South Africa, be it with African Americans in the United States that had to overcome years and centuries of Jim Crow and slavery, it's reconciliation is the pathway forward.
You know, I was going to ask you, Congressman, what your dad would do if he was having this conversation or if he was holding your seat, but I think you probably already told us. I hope that you won't be a stranger. Jonathan Jackson, Democrat from Illinois First. It's good to see you, Congressman. I appreciate you weighing in today. Indeed. I'm Joe Matthew in Washington. We've got to bring the panel in right now. We're not breaking. We have to continue this conversation with Jeannie Shanzano and Chapin Fay. Because I have to admit, and we're going to hear, obviously, perspectives from the left and the right here. I have to admit, Jeannie, I didn't expect that conversation with the congressman, with someone who sits on the House Foreign Affairs Committee. And I tried to make the point that he's actually, in many cases, sounding like conservative Republicans in the House. Does that tell you about kind of a migration or an evolution of democratic thought, specifically when it comes to Ukraine? Let's parse these out individually here. Or is the congressman just giving us his take from his perch?
It was a remarkably candid conversation, and the representative just fascinating. My view is he does reflect what is happening in the Democratic base. I don't know his district well, but I would assume in his district in Illinois, and you hear it from Democrats across the country, and you're focusing specifically in this instance on Ukraine. And I think he is absolutely right. Americans want to know what is happening with their public funds, and are those funds being utilized? Or is there a chance of success as it pertains to Ukraine? I am struck by the fact, what a difference a year makes. As Vladimir Zelensky apparently leaves the Capitol empty-handed. It is a year ago he was met with a standing ovation. And, part of what has happened here is they have not had success and Russia has. And so there is that, or the challenges economically and politically in the United States. All of those factors weigh in. And I think, the representative mentioned, he is new in his first term in Congress. This is why bring in new voices to Congress, younger officials, people who represent all parts of our country, because I think he is representing the Democratic base, not just what we're hearing from Republicans on both of these important issues.
Well, boy, that would mean that Joe Biden's on an island here, at least when it comes to Ukraine. Then again, there's Chuck Schumer. Listen to the Senate Majority Leader earlier today on the floor.
He made it clear, and we all made it clear, that if we lose, Putin wins. And this will be very, very dangerous for the United States. So we cannot let Putin influence through any surrogate what we need to do for Ukraine.
We turn to Republican strategist Chapin Fay now. Chapin, it's great to have you back. What do you make of this in-person pitch here? He sat down with the speaker, he talked to all the senators on his way to the White House. Now, is President Zelensky wearing out his welcome in Washington?
I don't know if I would quite characterize that as wearing out his welcome, but I agree with everything Jeannie said earlier about the changing situation, right, and what a difference a year makes. And I would just add some of the problems over the last year in America. The migrant border, that's something on a lot of legislators' minds, and may even hold up this whole, may hold up Ukraine, the Ukraine aid package. The war in Israel, right? We're now seeing on a lot of different fronts financially for the United States where that money is going. And I think, the representative we just heard from and the other side of the aisle is very concerned with how much is going to Ukraine and whether we will be successful and what that money, the accountability for the money. Right. I read this morning that they're projecting the Ukraine may need another 100 billion next year after 100 billion has already been allocated. So this is, a very big funding and foreign policy and war decisions for the Congress to make. So I think some negotiations and some questions about where the money is going is totally fair. And I think, like you said, a little struck by how the Democratic caucus is asking similar questions to what the Republicans have been asking, which means I do think support, to answer your first question, I do think the support, he's going to have to work a lot harder this time around to get the funding.
Jeannie, what do you make of the messaging from Speaker Johnson? He, again, met one-on-one with President Zelensky. He did get to the border. Just to be clear, when he spoke to reporters coming out of the meeting, there's a microphone set up there. He says, look, we just had our meeting. Well, let's do it right now. Mike Johnson.
Just had a good meeting with President Zelensky. I reiterated to him that we stand with him and against Putin's brutal invasion. The American people stand for freedom, and they're on the right side of this fight.
Then he got into conditions. He said, but we need a strategy. We need an end game. We need to know how to win, how long it's going to take. And he talked about that in length, saying that the Biden administration has not made good on this. We've been asking since the day I got the gavel, he said. And then eventually he got to a border deal. So, Jeannie, what is holding up funding for Ukraine? Is it lack of strategy or lack of a border deal?
I think there are components of both, and it depends on who you talk to, which of those they stress. I continue to believe it is in the Democrats' best interest to accept forward movement, even if it's not everything they want, as it pertains to security. The latest polling we've seen, Republicans are winning on the issue of border security at the polls. You look at the independent number, it's over 80% of independents say the border on the South is insecure. It would behoove the Democrats to get there and to move forward. The concessions being asked for are not traumatic and not dramatic. I think the Biden administration needs to be actively pushing for those. Deeply concerning to me is we are hearing that the White House, while they have talked about it and President Obama has, they are still not maybe as actively involved in Congress in pushing for this, but it is to their benefit. So border they should go with. It's as it pertains to Ukraine. The reality is the White House needs to educate on how much more expensive and costly in lives this whole thing will be now if we don't fund Ukraine at this moment and we push this off. What will the next steps be? Americans have the right to ask those questions. They've got to be answered over and over again by leadership in Congress and the White House. And I include in that, by the way, Mike Johnson, you're the Speaker of the House. You answer that question. You said you supported it. It's not all on the White House.
Fair enough. I wonder what we're going to hear a little bit later on today. By the way, 4:15 Washington time, if you want to take dibs on when this starts, it'll be a bilateral news conference, 2 and 2, Biden, Zelensky, 2 questions each. And you can just imagine, Chapin, what the questions are going to be. This might be the last opportunity Joe Biden has to make this case with President Zelensky standing at his side. What do you want to hear?
Well, I just underscore what Ginny was just saying, and you had asked her about, the different issues people have are latching onto. The problem is people are finding excuses, right? Where they were looking for ways to say yes a year ago, people are looking for the excuses to latch onto to say no. So I do think the president needs to, both presidents need to, just like Ginny say, explain why the investment now is going to be way less and easier than if we, let Ukraine do this all on its own, right? We can't let Russia win. It will resonate with a lot of people in the Republican Party for sure, right? If not funding this war means that Russia is going to win and Putin gets a win, then I think people will think twice about it. I don't know that the president will do this in this particular venue, but he really needs to show that he's addressing the problems here at home as well, right? There are ways to do both. But a lot of us on the right are not seeing anything here at home for Americans. So, another $100 billion next year to help the Ukrainians is a hard sell when nothing is happening here at home to help, close the southern border and help with problems here. So
Sure.
I do think that has to come out. Whether he says that sitting next to Zelensky, I don't know. He's got 2 answers, to really be concise and deliver a knockout blow here for his package.
Well, the border is one thing. I wonder if he gets to that today, Jeannie, and maybe when they're in the Oval Office together, they actually do craft a strategy. If he gets to both of those issues, and he's going to say openly, I'm sure, look, I know that we need a deal on the border to make this happen. We need to close our border, whatever, secure our border, whatever language he's going to use before we get to the matter of Ukraine. What does he need to say about strategy tonight when they go live at the White House?
I think he needs to talk about the cost to the American public if they don't approve this funding now. One of the things you mentioned is the rhetoric coming from the right about this and how Democrats are starting to match that. There is a key difference. We heard J.D. Vance talking to Steve Bannon and accusing Zelensky of corruption. There is little evidence, no evidence that I know of that. Those points are far afield from the valid questions about if we invest this money, what do we get out of it? Why is it in our interest and how? That's what the president needs to focus on because the answers are very, very real from that perspective. Just talk to the national security head of Poland, who is saying we have 3 years. We have closed the border at this point, as has Finland, because of where we are worried about an incursion by Russia if we don't get this right this time. Time is of the essence. The president has to say it's in our interest and NATO's interest to move forward on this now. The costs are too high to put this off.
Got to be honest. I think he needs to talk about where that money is going as well, having listened to both of you. If the bulk of the $60 billion stays here in the U.S. and goes to Alabama, Georgia, and Texas, where the defense contractors are, maybe we rename this bill. Something to think about as we move forward here. And we're going to get into this idea of impeachment coming up next. An impeachment inquiry against Joe Biden could be formalized as soon as tomorrow. Jeannie and Chapin will weigh in after we check world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Well, Joe, you're just talking about it. House Speaker Mike Johnson does say Republicans are moving forward with that impeachment inquiry against President Biden. There's been no concrete evidence to suggest the president has been involved in any misconduct, but Republicans claim they need to follow some leads.
We're not making a political decision. It's not. It's a legal decision. So people have feelings about it one way or the other. We can't prejudge the outcome. The Constitution does not permit us to do so. We have to follow the truth where it takes us, and that is exactly what we're going to do.
Johnson says a vote on whether to formally approve the inquiry is expected tomorrow. The Biden re-election campaign says the inquiry is a political ploy to boost former President Trump's campaign. President Biden says Israeli Prime Minister Benjamin Netanyahu is losing international support. During a fundraiser today, he said Netanyahu needs to support a two-state solution with the Palestinians. Earlier, the Israeli leader admitted he does have a disagreement with Biden on the future of a post-war Gaza Strip. Global news 24 hours a day. I'm Nancy Lyons.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all pushing higher right now. We have got the S&P trading very close to session highs. Looking at a 9-point gain right now on the S&P at 46.32. That is an advance of 0.2%. Dow Industrials up 113, up 0.3. The NASDAQ 100 index up 69, up by about 0.4%. The NASDAQ Composite Index up 50 now. That is a gain of 0.4%. 10-year yield 4.20% with a 2-year that's yielding 4.71%. Gold down $2.50 the ounce to $19.79. Drop there of just about 0.1%. Big drop for crude oil today. West Texas Intermediate crude traded here in New York down 4.2%, 68.23 a barrel on WTI. While markets continue to bet that the Fed will be on hold tomorrow, this morning's CPI report does bring into question the aggressive pricing of a dovish pivot. A key measure of inflation is reinforcing that the Fed's resolve to keep rates elevated in the near term. And with more, here's Bloomberg's Vinny Del Giudice.
Core consumer prices accelerated in November, rising 0.3%. Shelter and service costs offset a drop in gasoline prices. While inflation is moderated from a 4-decade high, the data underscore the difficulty of taming the beast. Federal Reserve officials meeting Tuesday and Wednesday in Washington are expected to hold interest rates steady at a 2-decade high. Vinny Del Giudice, Bloomberg Radio.
And as Vinny mentioned, of course, the Fed decision, 2 o'clock Wall Street time, Jay Powell's news conference, 2:30. We will have complete coverage. We'll carry Powell's remarks live for you here on Bloomberg and instant analysis, as you have come to expect over the years from Bloomberg Radio. Billionaire investor Warren Buffett's firm Berkshire Hathaway has cut its holding in PC maker HP Inc. by almost half. According to a regulatory filing, Berkshire held 51.5 million shares, or 5.2% of the Palo Alto-based company on November 30th. Now, that is down from about 97.8 million shares on October 3rd, according to data compiled by Bloomberg. Again, recapping, we do have stocks holding on to gains. S&P 500 index up 9 right now, up by about 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
President Zelensky, not the only thing that's being talked about in Washington, D.C. today, the whole funding debate over Ukraine and Israel. We're counting down to the day lawmakers take off for the holidays, which is 3 days from now. I suppose they could reschedule things, but it's sounding like everyone's going to leave without getting anything done. Well, there's one exception there. Looks like in the midst of all of the noise and the inability to fund our government, pay our bills, help our allies in hot wars, we will formalize an impeachment inquiry against Joe Biden that is expected to happen as soon as tomorrow. It's going through the Rules Committee today. Heard about it from Speaker Mike Johnson.
The impeachment inquiry is necessary now, as Whip Emmer just explained, because we've come to this impasse where following the facts where they lead is hitting a stone wall, because the White House is impeding that investigation now. They're not allowing witnesses to come forward and thousands of pages of documents. So we have no choice. To fulfill our constitutional responsibility, we have to take the next step.
Now, of course, well, members will have to make that decision. Remembering this inquiry started under Kevin McCarthy without a vote. He was called a hypocrite for that, rightly or wrongly, because, of course, he criticized Nancy Pelosi for doing the same thing. And that brings us back to the old impeachments, plural, against Donald Trump. Jim McGovern, the Democrat ranking member on the Rules Committee, has not forgotten.
Unfortunately, my Republican colleagues are so fearful of him, are so afraid of him, that they do whatever he asks them to do. That is why we are here. We are here because of Donald Trump. We are here because the insurrection did not succeed on January 6th, and this is about finishing the job. So let's not kid ourselves that Donald Trump doesn't play a role here.
All right, let's reassemble the panel for their take on this. Jeannie Shanzano, of course, our Democratic analyst, Bloomberg Politics contributors, here today, along with Republican strategist Chapin Fay, spent time as press secretary for then New York Governor George Pataki. Chapin, what do you think of this argument right now with all the things that we need to get done? This is the one thing that will happen this year. Do Republicans actually have something here beyond political motivation? Is Jim McGovern right? This is all about Donald Trump?
Well, yes, a lot there. But first thing I'll say is, all due respect to Congressman McGovern, he is 100% inaccurate in that. I think we're here because there are money trails. There is smoke. And it is the House of Representatives' job through the impeachment process to find out if there is fire, right? There are a lot of questions. They're getting no answers. There are a lot of transactions. The president's son is being indicted for things. So I think it is very fair and healthy for our constitutional republic for them to look into it, especially considering President Trump was impeached twice. So if we're talking about a fearful opposition party trying to get rid of an opponent, I think they can look in the mirror and think about that. But I will say, there are questions to be answered. Just like with Ukraine funding, there are questions to be answered, and that's the House of Representatives' job to do so. And again, the world is a complicated place. I know Congress likes to move very slowly and maybe do one thing at a time, but there's no reason that multiple negotiations can't be undertaken. And we pay full-time legislators. They have the time to take up all these different issues and get it done before the end of the year, including Ukraine and border security and all of that stuff. So I think impeachment is just one in a long list of things that they could get done before the end of the year if they tried and earned their salaries.
The key word there. Jeannie, I don't know. I'm pretty sure I do know how you feel about the grounds for an impeachment inquiry here. But the conventional wisdom is if this actually happens, and it is expected to tomorrow, that there's no turning that. You're not putting the genie back in the bottle here. It will lead to an impeachment trial. Do you believe that?
It absolutely could. And, I think the key here is they have a 3-vote margin. And as the 1819 Republicans who won the majority for the Republicans in 2022 have decided apparently to drop their opposition to this, in all likelihood, it looks like the whip count is going to go by way of an impeachment, and then we may see a trial. I think the big question here is, where is the high crime and misdemeanor? The reality is that's what the Constitution says you need. I didn't agree with it in the case of Donald Trump's first impeachment. I don't agree with it given what I've seen for Joe Biden at this point. But we are in a new era in American politics where impeachment is just another thing you do. And Joe, you said this, Congress hasn't done much. You're forgetting. They expelled George Santos. They've been censuring or trying to censure their members, and now they're going to go after the president. This is where we are in American politics. Republicans need to do this to drive up their contributions and their base. McGovern is absolutely right. You saw the representative from Texas who said the quiet part out loud. Why are we doing this? Because of Donald Trump in 24. The reality is they need to take away the argument that he was impeached twice. And how does he do that? He says, well, the other guy was impeached as well. And that's what they are doing. You heard the congressman from Texas say it. And, if not, what is the high crime and misdemeanor? Lay out the evidence. And by the way, people are willing to go before Congress. You heard Hunter Biden say he would testify publicly, and they said, no, thank you. So it's not necessary. It will happen, and it probably won't help but drive up contributions and turnout for Republicans.
Chapin, I'll ask you the same question. I've got less than a minute. Is there any difference anymore between an inquiry and a trial? Is this inevitable?
I think Janie's right. I think this is where we are in American politics. I think in American life, right? It all seems to be a piece of sort of cancel culture, and whether you believe it's real or not, and your feelings on it, it's certainly that we live in a 24/7 news and social media world, and that's what Congress has become and DC has become.
I forget who said it on this program after George Santos and Marjorie Taylor Greene and Representative Tlaib. Expulsion is the new censure. Maybe impeachment is the new expulsion. We'll have more of the panel next. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Walgreens Boots Alliance is reviving discussions on a potential exit from its international arm. This comes nearly 18 months after a sale process was scrapped. Shares of Walgreens Boots Alliance, they're up now by about 0.1%. State Street laying off 1,500 people before the end of the year. This according to the Boston Globe. The paper says the cuts were announced at the Goldman Sachs U.S. Financial Services Conference. State Street shares, they are gaining now by about 0.8%. More labor issues brewing at Starbucks. A second union is now accusing Starbucks of refusing to fairly negotiate, undermining the company's recent efforts to prove it's the one trying to get contracts completed. Billionaire investor Warren Buffett's firm Berkshire Hathaway has cut its holdings in PC maker HP by half. With more, here's Tom Busby.
Well, Charlie, according to a regulatory filing, Berkshire held 51.5 million shares, 5.2% of the Palo Alto, California-based company on November 30th. Now, that's down from 97.85 million shares on October 3rd, according to data compiled by Bloomberg. The transaction puts Berkshire on track to be a seller in HP for a second consecutive quarter. HP shares have underperformed those of rival Dell Technologies this year as demand for personal computers cratered in the post-pandemic bust. Sales for both HP and Dell shrank in the latest quarter and lagged behind analyst estimates. Charlie?
And that's Tom Busby reporting, and those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where Kaylee Lyons will join the conversation in just 5 minutes. We've got a lot more to talk about ahead, including today's CPI report and what that means for this White House. It's just too busy a day in the news. You can't pack it all in, but we will make time for it on the fastest show in politics after we get up to date on world and national news. We do that right now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Ukrainian President Volodymyr Zelensky did not appear to change any Republican minds after a morning meeting with lawmakers. They remain steadfast in their demands that any aid to Ukraine must be paired with major immigration reforms at the southern U.S. border. But Senate Majority Leader Chuck Schumer says there is no time to waste on funding Ukraine.
If we don't give the aid quickly, several things will happen. First, the military needs, but second, Europe and many other allies will say, what is going on here? They're not giving them the aid.
Senator Schumer, following this morning's meeting, Zelensky is also holding a meeting with President Biden this afternoon at the White House. With the CDC projecting cancer cases to increase 50% by 2050, the Memorial Sloan Kettering Cancer Center in New York has received what's being called a transformative donation of $400 million. It's a gift from billionaires Ken Griffin and David Geffen. The center's CEO and president, Dr. Selwyn Vickers, accepted the donation on ABC's Good Morning America.
It will continually allow us to take the programs in this golden age of cancer care to transform outcomes and patients' lives at a place like Memorial because of resources like this.
Vickers says the donation will also immediately help them improve facilities and the treatment of patients. Citadel founder Ken Griffin has been spreading his wealth by way of his new philanthropic organization that he's calling the Griffin Catalyst, which was launched earlier this fall. Media mogul David Geffen has pledged to donate his entire wealth to charity. Authorities have found a critical structural failure with the Washington Bridge, one of the busiest bridges in Rhode Island. The issue has prompted officials to close the westbound side of that bridge to begin repairs, which are expected to take months. The bridge carries close to 100,000 vehicles every day. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe.
Nancy, thanks. We've barely mentioned the campaign over the course of this hour, just some things that might interfere with it. But we appear to have news in New Hampshire today. I would love to get the panel's thought on this. Well, Jeannie and Chapin are with us. Chris Sununu promised to work overtime. Remember, he was actually running for president at one point. When he decided to move on with his life as governor, he was going to play an active role in helping to defeat Donald Trump, he made clear. And you've seen him with all of the candidates in New Hampshire. Chris Christie, maybe more than anyone, but Nikki Haley, Ron DeSantis, and today he's going to make an endorsement, according to the local station in Manchester, WMUR, reporting that Sununu will endorse Nikki Haley today. It'll happen at a town hall event in Manchester a bit later on. Chapin Fay and Jeannie Shanzano with reaction to this. Chapin, does it matter when Donald Trump is up 40 points?
Yes and no. I mean, it is to a certain extent a contest for second place, but Nikki Haley has generated a lot of momentum recently. I think she came across looking the best after the last debate. And, you know, politics and campaigns are about putting yourself in the best possible position to capitalize on opportunity. You never know where President Trump will be in his legal jeopardy next year. You never know what the situation is going to be. So she's doing a very good job of consolidating and being the candidate against the president. The problem is there are others.
Sure.
So it would really need to be a one-on-one. But then again, Donald Trump has still got, you know, over 50% in Republican primary, most Republican primary polling. So it's going to be tough. But this is good news for Nikki Haley and her campaign for sure.
Thank you, Chapin. Jeannie, does this matter with Chris Sununu weighing in at this point?
You know, it can't hurt for Nikki Haley. I think he is pushing, as he has been, for consolidation versus Trump. But that said, look, it didn't help poor Ron DeSantis out in Iowa when he got the governor's endorsement. And she is just as popular there as Sununu is in New Hampshire. So I'm not sure these hold as much weight anymore. But, you know, he's hoping it consolidates.
Great conversation. Little did we know what we'd be talking about today. Rick Davis, Jeannie Shanzano. Rick will be back. Jape and Faith, thanks.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top name.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Prices tick higher just as the Fed meets. Welcome to Hour 2 of Sound On. As today's CPI data show inflation picking up last month after being little changed in October. Cause for concern, we'll find out. And what it means for spending and the direction of interest rates by the Fed. We'll explore that straight ahead with Bharat Ramamurthy, the former deputy director of the National Economic Council in the White House. President Zelensky making the pitch for funding in person today in Washington. He'll be at the White House shortly. We'll talk about what his visit to the Capitol might mean for funding ahead with Nathan Dean of Bloomberg Intelligence. And former members of Congress are issuing a warning about political violence this campaign cycle. Greg Giroux at Bloomberg Government will talk to us about that later this hour, all after a look at Wall Street. Charlie Pellet has an update on the markets for us in New York.
Hi, thank you very much, Joe Matthew. Higher across the board, not just advancing, but best level of the day right now on the S&P, up 10.5 points to 4633. That is a gain right now of about 0.2%. Dow Jones Industrial Average also advancing, up 110, up now by 0.3%. And the NASDAQ Composite Index is higher by 61 points, an advance right now of about 0.4%. We've got the 10-year yielding 4.20% with a 2-year now at 4.71%. Gold, lower little change, down $2.50 the ounce. Spot gold, $19.79 the ounce, down by about 0.1%. Crude oil is down 4.2%. West Texas Intermediate crude, $68.35 a barrel. Bitcoin up 0.1%, 41,254 right now on Bitcoin. CPI Tuesday, consumer prices picked up in November, reinforcing the Fed's resolve to keep interest rates elevated in the near term. While today's CPI report has not altered bets the Fed will be on hold tomorrow, it does bring into question the market's aggressive pricing of a dovish pivot in 2024. Jason Furman is professor of economic policy at Harvard. He's also former chair of the Council of Economic Advisors, and he was interviewed this morning on Bloomberg Markets.
I could see rate cuts in March. You know, the next month or two might be a little bit choppy on the inflation side. We'll see. But if inflation looks really under control, if there's a little bit of softening in the economy, I think they can move from the very restrictive rates they have now to just somewhat restrictive rates and maybe start that process as soon as March.
And you can hear more of that conversation on the Talks podcast. You can download it wherever you get your podcasts. After yesterday's 19.4% surge, Macy's has been cut to sell at Citigroup on skepticism that a buyout